positive return, but uh, we're smoking the stock market, aren't we?
Yes, sir. And good morning, investors. Welcome into your February 2nd webinar presented by Portfolio Builder. Folks, my name is Dean Gallagher. I'm an investment consultant and partner here with the firm. Folks, what I do in my role is help everyone that is on our trials understand how a risk parity portfolio works and why, okay, and answer any questions right, that you have along the way. So just real quick, folks, I do want to point out a couple things. Okay, so we structured this portfolio on November 24th of last year. Okay, so we've had this portfolio open for just over 2 months. Okay, we started with $1 million allocation. Okay, and that has grown to an open profit of $231,363. Okay, so this is the Safe Alpha portfolio. These are all the assets that it owns. Okay, and I'll cover those in more detail in a second, but this is the Safe Alpha portfolio here. This is what you're staring at for the P&L. Okay, $231,000 in open. And then the overall year-to-date performance, this is from Thinkorswim and TD Ameritrade, right? You'll probably recognize this if you know the platform. Okay, is $123,150 here to the tick, or the equivalent of a 12.3% profit. So I'm just going to write that out too, just so you guys can see the difference here. So 12.3% profit here for the year, while the S&P 500 conversely is down for the year. So once again, the performance on the S&P 500, right? That's this right here, and we just got these stats from Yahoo Finance, right? Is down at basically 1% for the year. Conversely, Safe Alpha is up 12.3%. So however you want to look at that outperformance factor, feel free to do that. But negative if you own the S&P 500, up 12.3%, or a really good start to the year. Now, real quick, guys, I'm going to do the 10,000 foot overview on these assets. Okay, so you guys can take a look here. All right, so first off, folks, we have the TQQQ ETF. Now, you probably watched our marketing video and saw that this is one of the best performing assets in the stock market that's ever been created. And in fact, it is the best performing ETF that has ever been created. Okay. By holding a basket, folks, of roughly 100 stocks since its inception of this ETF, okay, to this point in time, let's just say you bought it at its inception, you held to now. Okay. And you probably wouldn't have done that because it was a new ETF, but now, hey, we have almost 11 years of data on it. We know that this is now the best investment and the equity side of things as far as sheer total return of anything that exists over that 11-year span. I don't care what publicly traded company it is. If it's over $10 billion, guys, it didn't return as much as the TQQ. Not Tesla, okay, not Apple, not Google, not NVIDIA. None of them did it. Okay. Any stock over $10 billion in market cap has not outperformed this ETF. Okay. It holds a basket of 103 companies currently. It buys and sells, it sells the laggards every quarter and buys the alphas every quarter. You don't have to, you just own this ETF, guys. It's now returned well over 11,000% return in just under 11 years. We're at 11 years and something like 20 trading days or so. Okay. And this month will actually mark its 11-year anniversary. Okay. So pretty cool. Once again, it's a basket of 103 of the best companies in the United States, period, right now. Okay. And this really represents our growth exposure. Okay. And for me, guys, I tell people this all the time, but you're going to have to pry my shares of TQQQ from my cold dead hands, because I'm never going to sell it, because it's going to elevate my family's financial status multiple factors up before I pass away. Okay. Next, guys, is our GBTC position. Okay. This is a really neat position because we can own exposure to Bitcoin in our tax deferred accounts. Okay. Short term, guys, we're looking for 50 to 100K on Bitcoin itself. Okay, and then potentially into the 250 range before quantitative easing is done. Maybe 5 years from today. Okay. So not only is it a growth asset for us, but it actually works as the best currency deflation hedge on planet Earth today. Okay. It's no longer silver. It's no longer gold. Bitcoin has taken over that position, at least over the last quarter. And it's really been cool too, guys. This has actually been helping protect on downside days. We had a couple days in December and a couple days actually in January where the overall market was down, but GBTC was actually up and supporting. Actually, that was all the way true back to October. So I guess it was the end of October, November, December, and in January, this has actually been helping to offset the overall downward push in the market. Okay, so pretty cool, guys. And you can actually own this through your tax deferred accounts. You can't own physical Bitcoin through your IRA, through your 401k. This is a beautiful way to get around that. And if you're up in Canada, you can use these with your tax deferred accounts as well. Okay, I think it's the RISA. Okay, now next, folks, is our exposure to this huge push into green energy. Okay, so as the Belt and Road Initiative gets built out, many of you guys probably are clueless to what that is. That is the largest infrastructure project on the planet. Warren Buffett and Bill Gates are doing everything they can to get their hands on that project. Okay, and they have their hands on the project. So the richest people on the planet, folks, are involved in the Belt and Road Initiative. Okay, and it's going to be, long story short, it's going to be the largest power production infrastructure ever produced on planet Earth today. It's going to go to all continents, and it's going to use a combination of nuclear power and really a massive global grid. Okay, and if you know anything about how electronics works, well, if you need to connect power, if you need to connect any circuit, you need copper to do it. Okay, so pretty cool. So we're looking at copper miners as a way to play the EV trend here that's pushing, and really not just the EV trend. That's what you'll hear on CNBC, right? The big picture, guys, is the Belt and Road Initiative. Okay, that's the big project that's going to use more copper than we've ever seen before. Plus, you take into consideration the EV push in the States, the restructuring of all the basically the road systems that have EV vehicles be able to charge in the States. Okay, long story short, guys, there's going to be a lot of copper pulled out of planet Earth in the next few decades. Okay, more than ever before. All right. So that's the position there. That's why we have that exposure. Next, folks, we have our disaster insurance. Okay. This is with UVXY. Okay. This is the easiest and best way to hedge your entire portfolio set of anything that exists on the stock market that we found. Okay. Seriously, folks, this position alone, okay, went up 1,227% from February to mid-March of 2020. Okay, that's the biggest sell-off period we've seen in quite some time. Okay, and so if you just held a 10% position there on your hedge side or on your defensive side of your portfolio, folks, guess what? If it rose up 1,227%, well, if you just had that position in place, folks, you're actually able to sustain that entire drop and actually show a profit during that time period. Okay, so pretty neat for that asset. So that's just covering the safe alpha, guys, and then also we're looking at the S&P 500 currently down for the year. And with that, Jason, I think that's a good, healthy overview. Keep it real 10,000 foot level, and I'll let you dive in deeper here so we can get everyone structured with the safe alpha portfolio, or they can take on more risk with our others, or take on less risk. If you are a millionaire, multimillionaire, we have an awesome portfolio set that's different than this one that you're going to love to look at as well.
Okay, great. All right, guys. So, a quick disclaimer: we're going to talk about some testimonials and results our clients have had during their free trial. We have to disclaim, for every positive result, there's probably an equally opposite result. Okay, so that's standard disclaimer. This is a particularly fascinating story that we're going to talk about right now. And it takes us back to March of last year when that massive stock crash came. And after Dean tells you a little bit about this story, we're going to contrast that to someone who's actually joined our customer support team, who was losing a lot of money. He was in a lot of pain last March before he found us. And you're going to get to hear from him too. So first off, Dean, can you tell everybody what this screenshot on my screen is all about, who it is, how you met him? You could tell him about the girlfriend and all that too. And then we'll let Jeff come on and tell his story about how he found us.
Yeah, absolutely. So folks, so far today, this is our best testimonial that we've had during a free trial. Okay. Now we have some great testimonials on our page from existing clients, right? So that's why you're not going to see this one on our testimonials page because Ron actually sent us this during his free trial. Okay. But with the different positions we had during his free trial, and this was during the worst sell-off week in March of 2020. Okay. And actually, statistically speaking, was the worst sell-off week we've ever had in the U.S. equity market since 1929. Okay. He actually made $97,019.89 during that time period. Now, you're probably asking, well, how in the hell did he make money? Well, it was our defensive side of our portfolio, folks. At this point in time, we had exposure to bonds and metals, but that does not work today during quantitative easing. You're forced to use volatility now, okay? But just want to talk about that a little bit. So that was a gentleman named Ron. He's up in Wisconsin. He's obviously one of our clients today. But it was really neat, guys, because he sent me a text message and he said, "Hey, Dean, check your email. The profits look good." And he sent me this. I opened the email and I just went, "Wow, that's incredible." I was just thinking, it was like, Ron is probably in the 0.1 percentile of every U.S. investor right now that this guy's printing profits. He started with about 584K, guys. Okay. So he'd been comfortable with what we're doing. He'd been looking for a really bulletproof, or we call it a tank-like system to put your capital into, okay, that can grow smoother and is defensive to downward movements in the market. Okay, so he had a general understanding of more or less what we were doing. So he put quite a bit of capital behind us. Ron's a really successful guy too, but he started with 584K, made $97,019.89 during the trial. But the best part, Jason and Jeff and investors here today, his wife had, or no, I'm sorry, not his wife, his girlfriend had about 3.6 million with Goldman Sachs. And that same week, guys, she had almost $1 million of drawdown. Okay, with a financial advisor with Goldman Sachs, right? They're supposed to be one of the best ones out there. But just crazy because he was bragging to his girlfriend about it, and it was hilarious because he ended up taking his girlfriend to a vacation to celebrate what he did. So it's kind of funny. Anyways, Ron is one of our clients today. You guys will meet him in the pro membership, and he's scaled up the investment capital he's using with us pretty substantially at this point. So with that, Jason, I'm going to hand it back to you, bud.
Great. Now, Jeff, you want to tell us your story with the same time period, what was going on?
Sure.
And this is Jeff Olson, everybody, out in Colorado.
Yeah, I briefly touched base earlier. So when you heard me and wondered why that guy was on, I'm the guy that gets to tell the story about how the other side of the coin looks. Let's start back in 2008. I had some disposable money. I switched jobs and I didn't know what to do with it. I knew I was starting to really need to save for my retirement. I was about 41. I started buying financial subscriptions. I bought quite a few of them over the next decade. And what I learned, two things from those decade of subscriptions and probably $25,000 spent to do it. I learned two things. I learned they waste my time. And that's a valuable thing to know, actually. They say the negative is just important to know as the positive. The second thing I learned was that in the end, I had less money. So I pay my fee, I do what they say, and I ended up with less money. And then comes into February or March of 2020, and for what I had to trade in a portfolio, I was fully invested, meaning I had no cash in the market, no cash out of the market. So bad things started happening, and I started to take a slide, and I'd say today was bad, tomorrow's going to be better. And then I would say today was bad, tomorrow's going to be better. I said that for 2 weeks, and in the end, I finally went to cash because I was devastated that I had lost 40% of my portfolio. So then when Ron's taking his girlfriend to Florida to celebrate, I was taking myself to the woodshed for a beating. So that's the contrast. But in the end, it worked out because I decided I'm not really one to quit or give up or throw in the towel. So I hopped back out, started researching, told myself there has to be something better. A few days later, I found Portfolio Builder on YouTube. This was end of March of 2020. I really liked what I saw. I really liked what I heard because what I was listening to was just a couple of regular guys in regular speak talking about finance, world economics, world politics. And I realized I really like this. So I'm going to buy in. And so I joined what at the time would be today's Safe Alpha portfolio. I made some gains in a short amount of time. But heck, I'm going to look at the next level. So I took a look at that. And that is what is today's pro growth portfolio. I like that. And finally, I just enjoyed these guys so much, what I was learning. And what I really learned the most is what I did not know in March 2020, and that was that the theory of risk parity and hedging for volatility. The truth is this: had anybody ever told me to hedge for volatility prior to March of 20, I probably wouldn't be on this phone call. The reason is I wouldn't have lost 40% and I wouldn't have kept searching for something. So I'd still be treading water. But finally, it came to June. I enjoyed myself so much, or enjoyed these guys so much, enjoyed what was happening, and that I had an opportunity to try the boot camp for 30 days. I tried it, I loved it, and I said, I'm going all in. So I sold stock. I did not have the money to pay for my subscription. I sold stock and I paid for it. And now I'm all in at this point, and I couldn't be happier. I don't think I missed a webinar in probably 3 or 4 months because it's become the favorite part of my day. I like these guys so much. And again, it goes back to that. Well, one, making gains, but two, I feel at the end of my webinars, I actually learned something. I can go talk to people and be more informed. And that's because Jason brings it all back to regular speak so everybody can understand what's going on. Right now, 10 months into all my programs, I'm all in. And as of today, I just checked, while Dean was talking, I checked my portfolios. And right now I'm back up 63% of the 40% I lost. So that's where I'm at, guys. That's my story. It's not the best one. It does have a good ending. And thank you very much for listening.
Oh, thank you so much, Jeff.
Sure.
Thank you so much. Okay, guys. Well, wonderful. Let's go ahead and go through the presentation. Our whole strategy to turn you in from a free trial to a paid member is to give you the trading plan for free, get you to build it out, make money, and then we know you'll come back because you want to get the trade alert updates. So that's how we've done this. So let's take a look at the current trading plan. I want to walk you through how to read the trading plan. I want you to copy down a few numbers that you're going to see on your screen so you can try this out after we get off the webinar. And then I'm going to go through the 10,000 foot overview to give you the confidence to pull the trigger. So this is the way we express our trading plan to clients on a daily basis. You're going to get this sent to your email as a screenshot. You're going to get a live webinar that's with the paid group if you join. Otherwise, you're in the daily free webinar, which is this one. And you're going to get a text message telling you if there's any changes. So every day I tell you, hey, stay calm, nothing to do. Let those profits keep piling in. Or you might get a trade alert, hey, something bad is happening. We need to increase our defensive position. And if that's the case, I give you the trade alert and tell you exactly what to buy or sell. Now, we do not believe in being hyperactive traders. In fact, we're really the opposite. We believe the less you do, the more money you'll make. So we're really teaching you how to grow a garden and be a farmer and have a long-term outlook instead of a lot of people who are trying to, get in there for a quick hit, make a quick profit, and then get out. And they're constantly searching for where that is. And I tell you, that's a very difficult strategy that ends up losing most people money. What we're going to show you is a
And
guarantee.
wasting so much time too. The amount of time wasted. That's what I don't miss at all, Jason. God, the amount of time I wasted by not compounding my growth earlier on in life. Oh my Lord.
Yeah, yeah. So that's the big difference here, guys. We're gonna tell you less is more. Don't be a dog chasing your tail. Um, you know, we've evolved. So if you have a mentality that you need to go hunt down a trade, you know, I think of that as like a hunter-gatherer trying to go chase down a rabbit. Then he's gonna go home and skin it and eat it. Now where is he at now? He has no food left. Okay, our clients are building a garden, and if they get hungry, they can go pick some veggies and some fruit right out of the garden, but the garden remains intact. It's growing while you're sleeping. It's growing while you're leisuring around. Okay, so that's going to be the big difference of what we're going to teach you today is that less is a lot more. And actually, 90% of all profits in the stock market happen overnight in the futures market, gapping it open. So the stupidest thing you could ever do is not hold your position every night. I mean, that's just a fact. Now, here's what's really neat. Every single member in our group gets the exact same return. There's no other advisory out there where they can even come close to making that claim. Everybody gets such crazy random results. It's pure luck if you actually make money with other advisories. In fact, we have a big history of representing all the other advisors. And while they'll brag and maybe have their star student who's done this or that, when you go actually survey their real customer base, almost no one gets the results. So what we're going to show you is how we have fixed that problem so that every single client gets the exact same results down to the penny. Okay, down to the split of a penny. You're going to get the exact same results as Jeff, as Dean, as I get. And it's because we're going to all follow a very strict ratio of shares. And we're going to look at investing as units of investment. Okay, so what we're looking at is the Safe Alpha Advisory trading plan. Now, I want you to note that currently to build one unit costs $1,198. So if I go edit the total to invest to one unit, what you're going to see happen is it's going to break down how many shares to buy of each ETF. Okay, and if I want to go with a larger account, let's say 10 units, I simply add a 0 and it's going to multiply that out for me. Okay, and this is going to be a tool you're going to have access to invest the exact amount of money you want to invest. But because we're all going to follow the exact same ratio of shares, we're all going to get the exact same return over a similar period of time. Okay, it's not physically possible for you to get a different return than Jeff or Dean so long as you follow the strict ratio of shares. Okay, so we have risk parity, which really means you have a defense betting down on the stock market, which we call a deflationary hedge. If the economy slows down, if earnings per share starts to fall, okay, that's deflation. It's going to make the stock market deflate. Okay, so you could think of this product right here, UVXY, your deflation hedge. Think of it as crash insurance. You've got health insurance, you've got renter's insurance, you got house owner's insurance, you've got insurance out the gazoo. But funny enough, most money managers have no downside protection, and most retail investors don't even think of it. Okay, so I'm going to show you what this product is, but I want you guys to start jotting this down. This is going to be your formula for success. This is going to be how you can test drive the product, make results during your free trial, and gain confidence. Okay, so I want you to write down the ticker UVXY. I'm going to go through and show you what all these assets are, but right now just write this down. And it seems like if you build 10 units out, you're going to get a great result and be very happy to join the real premium webinars later. So I'm going to give you a demonstration of 10 units of investment. And look at that, just while we're talking, the unit of investment cost has gone up. That means we're making money. That means the whole group following this program, just while you're watching live, is seeing their account grow by the exact same amount because we all own the exact same ratio of shares. Okay, so we're going to update this And what you're going to see is to build out 10 units following our strategy, it's going to come in at a cost of $12,010. Now you could paper trade this by jotting this down on a piece of paper, or you can put it into your real account. But I want you to do this right now. Write down UVXY and then jot down that this is your crash insurance and you need to pick up 110 shares. Okay, we're going to go through each of these and explain what they are, but right now just jot this down. That's step one, build your crash insurance policy. Step two, we're going to be buying the TQQQ ETF with 80 shares. Okay, as you can see, for every $12,000 invested, 8,000 is going into the tech giants. Now I'm going to show you why the triple Q outperforms buying the NASDAQ or the companies in the NASDAQ about 18 times faster. Okay, so you're never going to want to own Apple by itself again. You're never going to want to just own Microsoft again. Okay, you're never going to own some boring old stock again when I show you what the TQQQ can do for you. What it's going to really allow you to do is not be all in on stocks. Because it generates profits 18 times faster than owning just boring old stocks, what that really means is we can allocate less capital to the stocks and then have extra funds to build the defense. Okay, so stocks are kind of like your motorcycle. Everything else in our portfolio is going to be to convert your motorcycle into a tank because you're going into retirement and you need to be able to take some blows. So we're going to turn your normal stock account, which I would say is a lot like driving a motorcycle without a helmet. And we're not just going to put a helmet on you. We're going to put you in a tank, an indestructible tank. Okay, so I'm going to show you in a minute why the TQQQ blows away any other stocks in your account, period. It's going to grow your wealth 18 times faster. And again, the main reason why we like it so much is it frees up the ability to build more positions that defend your portfolio. Next position is GBTC. That's the Bitcoin position that you can get access to in most broker dealers and have a federally insured Bitcoin position. Okay, so we don't need to go mess around with crazy crypto websites when you can just buy GBTC. This is a small position, only $700, but it is an important role in the portfolio because it's playing the currency war that's playing out worldwide. We have every country in the world devaluing their currency. When one country devalues their currency, it forces other countries to do the same, because if they don't, the value of their currency rises too much and it makes their exports dry up quickly. Every country really relies on exporting its goods and services to keep its account balance healthy. So if your currency gets too expensive, it's a disaster. And so because America went and devalued its currency at the fastest pace in American history last year, it's forcing every other central bank to make the same move. So bottom line is, yeah, we think Bitcoin's going dramatically higher. We're not betting the farm on it. 20 shares of GBTC is what we currently have in this position. Okay, the final play is COPX, copper miners. Now, that's a great greed play when you see what the Democrats are up to, or I would actually say not just US politicians, the global elite are all after getting carbon emissions to zero. Okay, that's what they are dead set on. The only way they do that is by building nuclear power plants and then powering up lots of batteries, which primarily use copper. So there's going to be massive demand for copper. Throw in the infrastructure happening with the Belt and Road, that also uses massive copper. Everything uses copper. Okay, so copper is going to be probably the fastest appreciating commodity. But the real reason we have it is not for greed. We're actually long copper because we're worried that tech stocks don't particularly like inflation or rising interest rates in the bond market. So when I look at the copper position, I'm actually looking at that as a defensive position to guard my growth tech stocks that are very sensitive to inflation and an increase in interest rates. So you're going to get 60 shares of the copper miner ETF COPX. That's it. This is the portfolio that is just absolutely outperforming everything under the sun. It may look simple with only 4 ETFs, but this is very sophisticated and it's hedged against every significant risk that could possibly threaten your core position. Okay, so write that down. 110 shares of UVXY, 80 shares of the triple Q, 20 shares of GBTC, and 60 shares of COPX. Now, I do have some new trades coming to this portfolio soon, but this is the current plan that every single member in our group, which is over 1,000 members now, this is the exact ratio they're using to generate massive gains and outperform the stock market. Okay, so you got the magic formula. Now my job is to give you the confidence to pull the trigger. Okay, so let's go ahead and look at why we like this portfolio. And the first thing I want to do is really convince you to stop trying to pick stocks. Don't try to predict the next Amazon. Okay, it's, you know, it might look good to go back in time and say, oh, of course this little bookstore is going to turn into a gigantic e-commerce site that replaces all of retail. Okay, but back then it was just a little book site. There's no way you could have really foreseen the future of Amazon. Okay, so we're going to tell you that's just really not a good strategy, especially if you're in your retirement. Okay, there's big hedge funds that have entire teams of analysts, and the way they hit a home run with something like predicting Amazon early on is to buy 100 stocks and hope one goes up a lot. Okay, you're going into retirement. You need to have the exact opposite mentality. We want to just look, where are the richest people parking their cash, and copy that. Okay, let's just copy where the richest people put their money and then hedge accordingly. And you're going to see it's a much safer strategy and it works way better. It's more consistent. And if you're in retirement, you cannot afford significant losses because you have no new income. So every loss is permanent. If you lose 50% of your account in a stock crash, you have to double your money to get back to even. That could take an entire decade or two if that were to happen. And one thing we're really good at over here is making money when the market goes down. Now, that doesn't mean we miss out when the market goes up, but we're always going to be very paranoid of any kind of stock crash because our clients are 100% in retirement and cannot afford big losses. So who is the richest group of people in the world? Well, I'm going to tell you they pretty much all own the tech giant companies that we're going to place your funds into. We got Jeff Bezos with Amazon, Bill Gates with Microsoft, Mark Zuckerberg with Facebook. Warren Buffett's basically all in on Apple. Okay. And then we got Elon Musk. After that, it really falls off a cliff. We've got the Google buddies. The only real super rich group that we're not exposed to with this portfolio is Walmart. That's really the only one that's missing. So funny enough, the NASDAQ, which is the QQQ, automatically positions you into the most powerful companies in the world. We're talking about Apple, Microsoft, Amazon, Facebook, Google, Tesla, NVIDIA, Comcast, PayPal. Now, again, I told you if you own these stocks just the old school way, individually, or you own the QQQ ETF, I'm going to show you how to get 18 times the results by buying a different ETF. Okay, one little change to your stock positioning will increase your return 18 times historically. So let's take a look at that. So that group of stocks can be found in the QQQ ETF. And as the companies grow or shrink in size, that ETF's automatically kicking out the boring companies and putting in the exciting companies that are growing profits and revenues. So what's beautiful is you never touch it. You just let them do all the work. You never realize gains and you let it grow and hyper compound. Now, if you had just bought the QQQ in 2010, when the stock market had hit a new high, after we had the 2008 housing bubble crash, and more importantly, we went into what's called quantitative easing in 2009. Anyways, the point is, if I go back, you can see the stock market crashed and it rebounded. Just like we've seen today, we had the crash last year and we've rebounded. Well, if you just bought that at an all-time high, you had a little pullback to start off, but who cares? Because eventually this rose 550%, turning every $1,000 invested to $5,500. Okay, so what happens if we were to actually buy a different ETF? This ETF is the TQQQ. For every $1,000 you put into the stock market with the TQQQ, they're going to give you $3,000 worth of exposure. Okay, and the cost is 1% a year. Imagine that. That's a massive loan to increase your exposure to the stock market for 1% a year. Okay, no contracts. They're just going to triple your exposure instantly the second you buy this ETF. Now look, it's the same stocks, okay, the exact same portfolio, but if you had 3 times the exposure, over a decade, the hyper compounding effect is insane. Instead of turning $1,000 into $5,500, you turned every $1,000 into $108,000 currently. $108,000 compared to $5,000. Okay, so right now it's outperforming 20 to 1. 20 times the growth of your account if you made one simple change. Okay, so the big question now is, okay, great. We do understand that these are the best companies in the world. Now, what makes them so great? Why are these companies outperforming? Well, they have monopolies. They have great products. That's one thing. The main thing, though, is really 2 factors. Number one is they're buying back their own stock. So I want you to realize with all of these companies, the number of shares available that fight over the profits of that company are actually being reduced over time, making each share more scarce, more rare. It's really important to understand. Not only do these companies have the best products in their market with a pretty quality monopoly, they're buying back their own stock. Okay, when they buy back their own stock, that makes the amount of shares available reduce, which makes the earning per share grow. Okay, and that's creating a call option frenzy with retailers to buy these stocks. Now we're having record levels of call option buying, and the government's about to ship out another $1,600 stimulus check. Guess where that's going to go? Call options on these companies. Now, if someone buys a call option on, let's say, Tesla, they might be paying a premium of 30% per week. It's insane. So guess what the other player does? When they take that 30% premium, they turn around and they buy 100 shares of Tesla, and then they collect that cash. And then they might take half that premium, buy a put option to protect to the downside. And then if the stock market goes up, what happens? They lose the put, and then they keep the premium, and then they hand over the 100 shares. They make a lot of money doing this. So you end up with massive retail buying call options, which causes broker dealers to buy insane amounts of the underlying stock, which is creating a self-fulfilling cycle that creates a absolute bubble in tech stocks. And until they raise interest rates and stop giving people free money, they're just going to keep doing this over and over and over again. Okay, now once we see what's happening to the value of fiat currencies, you're going to really understand why people are rushing to buy stocks right now, no matter what the valuation is. Okay, so we're going to jump into that. One more thing about these guys is they have investment grade corporate debt, which means they get to borrow unlimited amounts of money at nearly a free interest rate. What do they do with that money? Sure, they do stock buybacks. They spend $10 to $50 billion a year on R&D, focused on big data, AI, robotics, and automation. The other thing they do, though, is they act like a venture capital firm. They're buying out all competition and anything interesting for almost free. Literally, when they do a buyout, typically the market cap of their company grows more than the cost of the acquisition. So they just have every advantage under the sun. They're lobbying every government worldwide, 100 times more than any other industry. They're taking over. Pick your favorite sci-fi movie. This is the group of companies who are going to create that future. And we're seeing exponential growth in technology. It's not slowing down. It's growing exponentially. So yeah, this is where we want to park our money. Okay, that's really obvious that this is the group of stocks. If you do it the boring way, you're going to make good returns. If you do it our way, you're going to increase your profitability 20 times. Okay, we've seen it wiggle between 18 to 20 times the growth by just buying the triple Q, because they're going to triple your investment in the market which has a hyper compounding effect over a decade of increasing the return 20 times. Okay, now what I want to do now is click the overlay. This is the VIX, this orange line. Just look, every time the triple Q goes down, the VIX goes up much sharper, much faster. That's important. That's your insurance policy. It's called the VIX. Now, in the past, it was really hard to trade the VIX. You had to know futures market, basically. Now you just buy UVXY. They're going to take your money, give you 1.5 times leverage. So if you want to insure for $1,000, they're going to give you $1,500 worth of insurance. Okay, so it's another leverage bet that's going to protect your downside risk. There's no other way to protect against stock volatility as well as this product. And so in March, you can see this traveled from about 1050 all the way to 135. Amazing. $10 to 135 in less than 4 weeks. And the percent gain on that is over 1,100%. Okay, now we just had a little sell-off recently. Let me just show you the gains we had on this insurance just during that. Okay, you get that little sell-off just recently. And what happens? This thing jumped 50%. Stock market barely fell a few percent. This puppy went up 50%. So you wonder how we're making positive returns while everyone else is losing this year? It's because we have UVXY protecting our risk. Okay, and you're always going to have a huge insurance policy when you follow any of our services. Now, right now, we're actually expecting a melt up for at least the next 6 months before any real serious volatility comes in, because the stimulus checks are about to get released and everybody's going to rush out and buy an insane amount of call options. When they buy the call options, broker dealers hedge by buying the underlying stock. It's a self-fulfilling cycle. So we're actually seeing some amazing returns dead ahead for investors that follow our strategy. Okay, so that's your crash insurance. Now, what's really driving the stock market higher? What if I told you it has, that the stock buybacks are really not the most important thing to focus on? That the call option buying is just icing on the cake? What if there's some other major macro factor that's been driving stocks up for the last 100 years, and that this is nothing new and it's never going to go away? So what I have up on the screen is if you're in the United States at least, your deficit. Okay, this is the amount of money we're spending beyond what we make. Okay, and you can see since 1990, really since the dot-com bubble burst, we're just on an escalating path to spending trillions and trillions of dollars we don't have. And with the Democrats completely in control, okay, spoiler alert, they're getting ready to pass another $2 trillion package. Okay, that's 10% of GDP. That's just to get started. Then they want to do another $5 to $8 trillion climate change infrastructure deal. Okay, they want to expand how many Americans get entitlements massively. So the big picture here is that the government's going to continue spending trillions of dollars it doesn't have at a faster and faster pace. And the more they do that, I'm going to tell you, the faster the stock market will go up. Let me repeat this. The more debt your government goes into, the faster the stock market will travel higher. I'm going to prove that to you. So if you're worried about what the stock market's going to do in the next decade, stop it. Okay, as long as you can count on your government to blow out its deficit, I'm going to show you proof you can count on that stock market going up at a faster and faster pace. Okay, so let's take a look at how this breaks down on a monthly basis. This is December from the Treasury. And this is one of our best tax months. So you can see we collected 346 billion bucks, but we spent 490 billion. And that's on a good month. That's a deficit of $150 billion. Where does all the money come from? What if I told you that the US government has promised the US population 100 trillion plus of future liabilities, broken down into Social Security, income security, health, Medicare, veterans benefits? What if I told you around 8 to 12% of every dollar we collect goes to our interest payments on our debt. What if I told you the US government realizes that there's no way they could possibly deliver on all the promises we've made without devaluing the dollar and devaluing our debt load? That's the plan. Okay, you got to realize that is the only plan that works, because the opposite would be an immediate Great Depression, and no voter is going to willingly accept an austerity government that wants to keep the value of money intact. Oh no, they want as much free stuff as they can get their hands on because they see everyone else getting so much free stuff. America is being looted. Okay, and all the money is getting shoved into the only place that can store value. Okay, we're going to show you it's really three things that can store value when you go into just an absolute disaster of your government spending trillions of dollars per year that they don't have. We're going to say that stocks, precious metals, and commodities, which are rare assets, scarce assets, are the only way to protect your wealth. And that if you're invested in a currency like the dollar, or if you're invested in US treasuries, which is just what is a treasury? It's a future bet on the value of the dollar with an interest payment. Okay, so I'm going to tell you, if you buy the treasury market or you buy just currency, you're going to expect to lose most of your purchasing power in the coming decade. I'll show you exactly how much I think it'll be. Now, if we go down here, we get the breakdown. See these brown lines? This is your deficit spending per month. Okay, now I know these look kind of small. They're only $100 billion of money we don't have each month. April, May, and June. Those three blocks right there are not normal. That represents all the money America's printed since the conception of the Federal Reserve. Okay, so 100 years of money printing was doubled in April, May, June in 3 months. Insane, absolute insanity. Okay, so if you're starting to figure out why are people rushing into the stock market, it's not because stocks are so great. It's because the dollar is a disaster. How does this work? Let's walk through the creation of money so you can see what a scheme it is. And again, why you don't want to be in the dollar and why you want to copycat what the super wealthy are doing, which is leveraging into, again, stocks, precious metals, commodities, things that are scarce and rare, that there's not an infinite quantity being created. So we go create a budget that has to get passed at 3 branches of the government. That 3 branches is currently all Democratic. So they have a free pass to spend basically an unlimited amount of money and give it to whoever they care to give it to. Once they do that, they go to the Treasury to issue the debt. Now they're about to unload something like $1 trillion sitting on the Treasury. So they're not too worried about raising money right now because Trump left office with over, I think it was 1.8 trillion in the coffers ready to be unleashed into the economy. So get ready for a huge push just from that. And that's happening right now. And then they're going to go pass another $2 trillion package. Good grief. So 3.5 trillion to start. Then they do another trillion at the end of the year. Now they're doing 2 trillion. What is wrong with these people? What on earth are they thinking? So if you can't beat them, you have to join them. Otherwise, you're going to get ran over. Let's talk about how this debt gets sold. Who benefits? Okay, so we got primary dealers. These are the banks that get a sweetheart deal to make an absolute fortune with almost no risk. In fact, I'm going to say no risk by flipping the US debt. And the big player is good old JP Morgan. They just paid $1 billion for fines for manipulating the precious metals and treasury market. They're the biggest purchaser of US debt. So when the debt comes out, JP Morgan gets to borrow from the Fed at 0% rates right now. That's the current effective federal funds rate. Every time the government gets in trouble because the economy gets crushed, they do the same thing. They lower interest rates so that primary dealers can borrow for cheap, and then they start issuing massive debt. Okay, so JP Morgan by law has to pick up all that debt and then resell it. That's their job. That's why they get this sweetheart deal, and they love it. I'll walk you through it. So they borrow for 0, And then they get to sit there and buy all our debt, which has a positive yield. Then they get to turn around and sell it to broker dealers who then resell it to retail. They get to sell it to big hedge funds, other central banks, to pension funds. A lot of people actually want this stuff. Okay, whatever they can't sell, guess what they do? This is where the creation of credit begins. Then they get to resell it back to the Fed. So all the unwanted debt, they're not going to hold on to it and take that risk. Oh no, they're selling it right back to the Fed. This is called monetizing debt. We're not supposed to do it, but we sure as hell are. So if you like the 2009 to 2020 return, realize it was about $1 trillion a year of printing. Now you might say, oh, it looks like they stopped printing in 2016. Stocks still went up. Aha, that's not true. Europe and China started printing aggressively as we paused. So these guys are all in cahoots. The global elite are all on one team, and it's not your team. Okay, so the global elite all work together, and they take turns printing money at each continent to ensure that financial assets slowly but surely rise, and they do not care if the value of their currency falls. Okay, so the labor force relies on the value of their paycheck to pay for their goods and services each month. Okay, they do not give a darn about that. All they care about is that the stock market keeps going up because they have all of their wealth stored in the stock market. Okay, so they're all in cahoots. So let's look at this. We printed $3.5 trillion to start off, and we're on track to do $1.5 to $2 trillion a year. When you realize we're going to run probably a $4 trillion deficit next year, either the Fed has to do a lot more QE or we're going to have to tax the hell out of everyone. So I'm keeping a close eye on their policies related to taxing. But right now, they're more interested in just passing all the massive budgets and putting pressure on the Fed to gobble up more of our debt or devalue our currency. And it's not just the US printing so quickly. So look at this. If you thought the last bubble was great, look at what's happening today. It's happening 5 times faster. We're devaluing currencies 5 times faster worldwide. I'm going to tell you when to predict that they'll stop doing this based on what they're telling us and based on historical data here. Okay, here's Europe, $2 trillion to start off, faster than they've ever done. Now, remember I told you that the US stopped printing money in 2015, but Europe and China began? Okay, now you can trust me here. Look at Europe printed $2 trillion right there. Right when we stopped, Europe came on and said, don't worry, we'll keep devaluing currencies. It's our turn. What about Japan? Okay, Japan's been printing money nonstop since 2012. Now you can see they're printing faster, but they never stopped. Okay, what about China? Boom. Now they don't have a freely traded currency, so they don't have a bond market, so they just issue credit right into the system. So we look at the Chinese credit impulse. Look at what they did. 2015, their housing bubble nearly collapsed. So rather than go into a depression, which would have sent the whole entire planet on a depression, they chose to devalue their currency. And that's when they popped up their credit impulse. And they did it again in 2017. What do you know? Stocks go up. Okay, and what are they doing now? They're printing money at the same pace as 2015. So what the heck do you think is going to happen? You think stocks are going to go down? No. Okay, so here's a look at the value of the dollar and its purchasing power over a century. The only time the dollar's gone up was after World War I, when the British and the French were pissed at the Germans. They wanted reparations. Okay, the U.S. had lent a bunch of money to Europe. That's when we got all the gold. So what ended up happening was you got a banking crisis in Europe because the Germans could not pay the debt that everybody was demanding. So you ended up putting Germany into a very nasty pickle, which eventually led to World War II. So hopefully we've learned our lessons from that. But basically, Europe was in a 10-year depression after World War I, and eventually it spoiled all the way to the United States. That's the only time the United States has seen their currency go up. And that's also when we accumulated almost all of the world's gold, 2/3 of it. So it didn't work out well. You get one of the worst stock crashes in world history. Now they learned their lesson. No longer do we have a gold standard. That is way out the window. And so what's happened since then? The value of the dollar has been crushed. Okay. Now, what's happened over this century of stock returns? Okay. For 100 years, stocks have gone up. Have there been some periods where they went down? Sure. But big picture is this: as long as you can count on your government to spend money it doesn't have, the most likely outcome is the dollar goes down, stocks, commodities, precious metals go up. It's really simple. And right now, I'm telling you, they're about to spend more money that they don't have for the next decade because of the global lockdown at the fastest pace in world history. So you really don't want to miss out on what's coming. Okay, what else? Where can we see inflation in rare assets? So there's only a limited supply of houses to rent. What's the effect of devaluing the dollar? Rent is up 350% since the mid 80s. Medical costs are up 580% since the 80s. College, which again the government manipulates, guarantees, 1,600% increase in a college degree. Okay, what about electricity? For heaven's sakes, you think it'd be a little cheaper over time to create energy and keep the lights on? Oh no. Because of the government devaluing your currency, the cost of electricity is up 1,000%. A bloody 1,000%.
Just goes into the utility company's pockets, Jason. Well, weird. You might want to own those things.
Yeah.
Too funny.
So if we use the 1980 CPI model, which I believe is way more accurate of what people really buy, we're sitting on 10% inflation right now. It's horrifying. So if you have $1 million, next year it's worth 900,000. You wait 5 years, your $1 million is worth $500,000. Okay, God forbid you wait 10 years in cash. You'll watch your $1 million be worth $100,000. Pure insanity. So when are they going to stop doing this? Well, here's what they've told us. First of all, we got to go back in history and find a collapse of the economy similar to what happened when we foolishly locked down the world. Okay, there's only two periods in time. Okay, we go right back to World War I, World War II. Okay, so after World War I, we had a huge economic hit worldwide. That's the worst, leading into the Great Depression, 1929 to 1932. Okay, that's a period that's the only period that's worse than what we've just gone through. Now, I know it doesn't feel like it because we have, again, printed more money in 3 months than we did in 100 years. So we have not yet felt the pain of this. The recovery is going to be slow and dull and not that exciting. I'm going to tell you that's the best news ever for stock investors. Okay, so we got the Great Depression is the worst economic decline in history. It took at least half a decade to recover from that. Second worst is what we did in March. Okay, that was the second worst. If it weren't for e-commerce, it probably would have been the worst. But luckily, we could replace a lot of our buying activity with Amazon and DoorDash and drive-through McDonald's. Okay, if we didn't have those things, it probably would have been the worst economic decline in world history. Third worst was mobilizing for World War II. Okay, all of those instances, it did take at least half a decade to recover the labor market. Now, here's what the Feds told us. They want to create symmetrical inflation before they hike interest rates and begin tapering quantitative easing. And I promise you, the second the Fed starts rising interest rates and tapering QE, Europe and Japan and China are going to start printing to offset that, because the last thing these global elites want is for their precious stocks to go down, because all of their wealth is stored in it and they control everything. But here's what the Fed, let's focus on the most important player right now, and that is the US and the Fed. They've told us they want to get inflation that they look at, which is total BS. We just showed you real inflation's really, really red hot. They believe the core inflation is 1.6. They want to get it above 2 for as long as it's been below 2. I think it's going to take an additional 12 months or more to get inflation to the 2% target. We've already been below 2 for 9 months. Let's say this month we printed a 2% inflation goal. And I don't think we'll do it for at least a year, maybe 2. But if we did, tomorrow, they would run interest rates for at least 9 months at low rates, even as we run above 2. Okay, now if it's going to take them 2 to 3 years to get to that target, they're going to run it hot for another 2 to 3 years. Bottom line is the biggest central bank that's pumping the market the fastest is going to keep rates at zero and do 150 plus billion dollars a month of QE, probably for the next half decade. And you're quite likely going to get the best stock market return in history because of this. And now you've got retail investors coordinating attacks on stocks by aggressively buying them and creating short squeezes, forcing broker dealers to do the covered call strategy. It's absolute insanity. Now, with our strategy, you're protected against any sudden sell-off in stocks. That's really important. Just because we're going into a bubble doesn't mean there's not going to be massive volatility where we want to be able to cash out our insurance and buy more stocks on every single sell-off. So the big strategy here is to really buy UVXY when it's cheap and dump it every time there's a scare, because you know what's going to come next. Government's going to spend more money it doesn't have. The dollar is going to continue to lose its purchasing power. Corporations are going to continue to buy back their own stock. And you want to buy the dip. So we want to sell our crash insurance on all fear and buy more stock. When there's blood in the street, you'll have a massive gain on UVXY and you're going to buy more stock. And until they hit their target of symmetrical 2% inflation and recover the labor market, which is going to take them a damn long time, we haven't really felt the pain of all the bankruptcies that are about to hit the small businesses. It's going to take forever to get inflation to 2. So until they get to their targets, we got to bet up. And we got to bet on the dollar losing value. That's really your only option right now. Okay, so here's a look at the dollar. This just shows you the dollar against the euro, really. You can see we're printing faster than Europe. Europe's not going to like that. They're going to start increasing the spending so that their currency doesn't get too expensive and crush their exports. Same thing with China. China's currency is getting way too strong. So even though the US is starting to slow down to only 150 billion a month of QE, expect China and Europe to increase because their currency is getting too strong. So bottom line is this leads you to a great investment. And then here's the bond market, by the way. We're expecting the bond market to get crushed another 30% down to this level. So bonds are a bad investment. You'll probably lose 15 to 20% a year. The dollar will lose 10% a year. Any fiat currency will lose a lot. Now, again, the dollar led the way with devaluation. Now everybody's going to follow suit. Everybody needs to weaken their currency. Otherwise, exports are gone. So expect China and Europe to start increasing QE because their currencies have become way too strong. So this leads us to Bitcoin. That's why Bitcoin is such a hot product right now. We're expecting GBTC to skyrocket over the next 5 years. It's a great little hedge to add in there to play the currency war that's currently rolling out. Okay, silver is another way to play that. We have silver in our pro strategy. Same idea. Here's copper miners. This is what could be a little bit of a headwind against growth stocks. Okay, when interest rates rise as the bond market crashes, that's really hard on growth stocks, and it's really good for oil and copper, for commodities. So if we do get a real recovery, that's demand side, we're expecting copper to skyrocket. And if we go back in time, we can just see how crazy that ratio can get on the gold to copper ratio. And we're actually expecting copper to get red hot. Okay, so if this is pointing up, if copper is going up faster than gold, that's an amazing prediction of a recovering economy. Okay, it's called Dr. Copper. We'll teach you more about that if you do upgrade. This is one of our most important indicators, and it's pointing to a recovery and not a crash. So that's very good. That's why we have a low crash insurance policy right now. Now, Freeport-McMoRan is one of the positions in your copper miner. Look what that did in 2008 to 2009 during QE. It had a 600% gain. What's it starting to do right now? Take off. Everybody knows what's coming. I think we're going to blow past the top. Okay, because the demand for copper is massive now compared to a decade ago. So here's your copper miner ETF, COPX. And again, very similar pattern. It's just more diversified into a whole group of copper miners instead of just one. Another predictor of interest rates and recovery is price of oil. Look at the correlation between the 10-year interest rate and the price of oil. Okay, so they're highly correlated. Everything's pointing towards a recovery right now. The only thing that would scare us would be runaway inflation like we saw in the 70s. Okay, so if we see the inflation get out of control and we have to go through a massive period of hiking interest rates like Paul Volcker did, a new strategy will be introduced to you. Okay, but that's not what we're seeing. I see at least another decade of getting away with low inflation. And that's because of the globalization of manufacturing. That's because of that really cheap labor in China.
Yeah, and Jason, just on that too, if he's, just saying we'd switch to the Paul Volcker model, right? If inflation runs wild, talk about the easiest way to make money on planet Earth if we do get to switch to that. I would love to see that.
Yeah, so I think we're 1 to 2 decades away from having to worry about hyperinflation, especially if we decouple from China. That would really be what would make the cost of everything rise. So we're ready for it. If we get a period like that, you can get a 10 to 15-year stock market crash. And we're ready for that. That's not what we're predicting right now. We believe there's going to be low inflation for the next decade, and that you're basically going to see the stock market just extremely bubble up, bubblicious stock market. And again, if there's a crash, we don't care. We have an insane hedge that goes up massively faster than stocks go down. So until the Fed gets that inflation and they cannot maintain it, you got to bet up on stocks. You got to bet your government's going to devalue your currency. And wow, look at that. What do you know? Our portfolio has gone up during my little 50-minute speech. So let's recalculate how to build out 10 units. So as you see the unit of investment go up, that means the portfolio is going up. So you're seeing this grow as we speak. Okay, so one more time, guys, let's write this down. First step is buy 110 shares of crash insurance UVXY. Second step is buy 80 shares of the triple Q. It's way better than any stock you own. It will grow your revenues and profits 20 times faster right now. We're going to hedge against the currency war with GBTC. And then we're going to hedge against rising interest rates and inflation in the economy by playing the copper miners, COPX. It's a greed play, but it protects your growth stocks. Okay, so that's the magic formula. Let's run that survey now, Dean. If we have some millionaires out there, I'm going to show you my pro strategy, which is safer and uses a globalized risk parity strategy. So if you have over 200,000 bucks, I'll show off the pro strategy. Otherwise, we're just going to showcase this portfolio today.
Okay, great. And Jason, I did go ahead and launch that poll. Okay, so for everyone in here, please go ahead and take just a few minutes to fill it out. And we'll wait till at least 75% of the crowd fills it out to continue on, guys. And then we'll get some portfolios built out right after you guys get this filled out. Okay, so 2 questions in the poll. Okay, and if you see that white and green screen that just popped onto your computer, okay, just take a few minutes, folks, to go ahead and fill that out. Okay. So the first question is, investors, it's critically important to review how much cash the Federal Reserve is burning in your ecosystem. Let's seriously think about the cash you have sitting in your brokerage/bank accounts today in this exercise. And just please select an answer below, folks. And this is anonymous, right? There's about 30 people in the webinar here, which is awesome. So we'll probably sell out of our spots here today. But guys, no one will know. Your neighbor's not going to know. If you put in, you have 700,000 in cash, they're not going to know, right? It's completely anonymous. Very cool. And all we get to see on our side too is just the statistics, guys. So we don't know either, just so you guys have a heads up. Okay. And it looks like so far, 20% of let's see here, that just changed. About 33% of the crowd has between 200,000 and 500,000. Okay. Looks like 29% have less than 29,000. 14% have somewhere between 50 and 100. 14% have between 500 and a million. Okay. And then 14% have between $1 and $5 million. Okay, so far, and keep filling out that poll, guys. We got to get over 75% before we're going to go back to that screen. So make sure to just take a couple minutes to fill that out. And thank you for it looks like 26% of the group has filled that out so far. And once again, we don't know who you are, guys, but we can see just the percentages after it's filled out. Okay. So far, a lot of people have said, I honestly had no idea. Inflation is burning my cash at the fastest rate in U.S. history. Love seeing that answer. Typically, that's honestly the number one response that we've had over time, which is so cool, guys. And there's so many people I'm talking with every single day, that have more than $250,000 sitting in cash today. And they don't have a plan for it, right? And so really they're just kind of burning capital instead of growing it, which breaks my heart, honestly. But hey, that's what we're here for, guys. We're here to help you understand why it's dangerous and how we can get that working for you. Okay. Very nice. All right, so it looks like so far, most people are still saying, the majority are still saying, I honestly had no idea. Inflation is burning my cash at the fastest rate in U.S. history. It's beautiful. Love to see that. Okay. 20% said, I'm looking for a safe portfolio to invest with currently. Nice. 20% said, I had big losses in 2000, 2008, and Q1 2020, just hesitant due to the big losses. Yep. Understand that, guys, but look at where the market is in those points of time from that too. Right, from 2000, 2008, and hey, we just got a crash in 2020. So historically, that's a good entry point for you, even if it's a year later, right? And we're not even a year later at this point. Heck, the market didn't even start really crashing until mid-February of last year. Okay, and then 20% said I just got control of my IRA/401k and want to invest it safely. Beautiful. And one person did say that I'm still looking for the next 1,000% return ultra stock. Nice. Very cool. Well, Jason just talked about the best performing ETF of all time that's outperformed literally every single stock with a more than $10 billion market cap over the last 11 years. Right, in great detail. Okay, cool. Very, very cool, guys. Okay, looking good. So it looks like we have 37% of the crowd has filled that out, guys. So just make sure to fill that out. Once we do get that filled out, folks, we will move on, start building some portfolios here. Okay, and it looks like we do have quite a few people, Jason, with over $250,000. So we can certainly show off the pro portfolio here. Okay, and thank you guys for entering your info there. Once again, it is anonymous. Okay, we just see percentages. We don't see any type of information connected to what you respond to. We just see a percentage on our side. Okay, so very cool and looking good there. Okay, and now we're just shy of 50% filled out, folks. So if you haven't yet, just respond to that poll really quickly. Very good. Big group here today. So thank you all for your time. And Adrian, Oliskar, Bernard, Cam, Catherine, Krista, Dan Johnson, Daniel Gomez, Eric, yes, Gary, Jed Hart, Kay, Konstantinos, MG, Polly Forrest, Rakan, Roberth, Ron, Sol Rosenberg, Tim, thank you all so much for taking the time to join us here, folks. And make sure you filled out that poll really quickly if you haven't yet. Okay, so looking good. Okay.
Some accounts over 100,000. So I'm going to go ahead and give you, for those of you with a larger account, this is our pro strategy. And I'm going to give you the trade alert for a $50,000 portfolio to test drive the pro strategy. Okay, so let me walk you guys through that. And again, this is what's extremely popular with our wealthier clients because they want more diversification and less risk. They're going to be a little more careful instead of greedy. Okay, so that's really the big difference in Safe Alpha compared to Safe Growth Pro. So in the Pro, we're going to start off with a larger hedge. So it's already got twice the hedge as Safe Alpha. So your first step for a $50,000 pro strategy would be to buy 841 shares of UVXY. Next step is we're going to buy 89 shares of UPRO. Okay, UPRO is the S&P 500. Instead of just owning the NASDAQ, we're going to expand you to the top 500 North American companies. Actually, it's 505. So you have a lot more diversification in US equities. And again, that's going to be only 14% of your total portfolio with 89 shares. It's trading at 22 times multiples. We go to emerging markets, it's trading at 15 times multiples. That's a massive discount. Okay, it's almost off 40% in terms of the multiple and how expensive those stocks are. We're actually expecting an outperformance in emerging markets relative to the S&P 500. So we're 20% long EDC, which is going to give you 3 times the results of the EEM ETF. That's over 3,000 companies. Okay, so now you own 3,500 companies. Next step is we're going to buy EFO. Okay, Japan and Europe are trading at 16 times multiples. They are a huge value play. So with EFO, you get another several thousand companies. By owning these 3 ETFs, UPRO, EDC, and EFO, you have a tiny sliver of every single important corporation that exists on the entire planet. These 3 stock markets combined have a value of $100 trillion. You want to know where the global elites store their wealth? In this exact set of corporations. Okay, the more you can spread it out, the less risk you have per business, per country. Think about all the political risk of investing in a single country or even a single continent for that matter. That's eliminated in this portfolio. You're not just overweight in tech. You've got the banks, you've got the utilities, you've got everything in between. Next thing we're going to do for Pro members is diversify into more commodities and precious metals. So we're long oil. The global elite want to get carbon emissions to 0 by 2050. How do you do that? You make oil so expensive, nobody will even think of using it. We believe the price of oil is going to skyrocket. And again, it's protecting against rising interest rates and inflation. Now we're long copper miners because instead of seeing regulation driving copper higher, we're going to see actually demand side growth in copper. So we want to own the miners with COPX. We've still got our Bitcoin position. The Belt and Road's going to build 20 nuclear power plants. Okay, windmills and solar panels are a disaster. Okay, people don't realize every decade those create so much waste. They have toxic metals that leak out of them. They're really not that great. The only solution to get to carbon emissions at 0 by 2050 is massive nuclear power plants. We got Bill Gates, Buffett, and the Chinese all teaming up, good for them, to build nuclear power. They're doing it over in the Middle East with the Belt and Road. We really like being long uranium. And then finally, another way to play the currency wars with silver. That's the old school way. The pro strategy is going with time-proven investments, gold and silver over Bitcoin in terms of positioning. So we have a large silver play right now. And so this is what you want to write down. If you want to test drive pro, and again, this one is just killing it. It's up 15% this year, just to start off the year. The stock market's down 1%. Okay, so you have 841 shares of UVXY. Write that down. 89 shares of UPRO, 89 shares of EDC, 177 shares of EFO, 89 shares of UCO, that's spot oil, 89 shares of copper miner, COPX, 44 shares of GBTC, that's your currency hedge, 133 shares of URA, that's uranium related companies and miners, and then 89 shares of AGQ. Okay, and that's gonna be how you test drive that pro strategy. So I'm gonna leave that up for a little longer, and then I'll go back to the safe alpha so that everybody can write down their positioning and build out your account today. See this work. And then later on, you can upgrade and get the trade alerts when I tell you what to buy and what to sell to optimize for the future.
And then really, Jason, too, not only on the trade alerts, guys, but really, especially for the people in the pro portfolio and in the safe alpha, our clients that are using millions of dollars and hundreds of thousands of dollars with us, they really like the opportunity to meet with Jason multiple times a week, right? So it's really cool, guys. No matter which program you're going to sign up with, not only will you have the trade alerts, but you're going to have a beautiful education set that you're going to learn from Jason by meeting with him weekly to really understand what's going on in the markets and how and why everything works and how it's all correlated together. Okay, as the education part of it is neat, guys, because once you've worked with us for a while, right, you're going to be able to then go teach your kids, your grandkids, and maybe your nieces and nephews if you don't have kids, about how the market works, and you can show them what you've learned, right? So you can create a multi-generational impact from what you learn with our firm. Okay, so that's how we're a little bit different, guys, than the financial advisors, the mutual funds and the hedge funds. We're going to teach you literally everything we've ever learned. Okay, and we look forward to that process with you. Okay, so beautiful. Okay. All right, and sorry about that, Jason. Just wanted to jump in there for just 1 second there.
Sure, no problem.
Give you a little breather to get some water.
Okay, great. I'm gonna go ahead and go back to the Safe Alpha portfolio, and then let's see what questions we got out there, guys. Who's gonna build their portfolio out? Who has questions?
And also, who's already built out a portfolio and what are you up at this point? Would love to know that as well. Hey, Bernard, you were the first one to raise your hand there. Oh, let's see. There we go. There's Bernard. And we have Konstantinos. Go ahead and jump in there with your questions, folks. Eric, Daniel, go for it. And Bernard, you did have your. Go ahead, guys.
This is Konstantinos. I have a question. Actually, I test drove the Safe Alpha. A friend of mine, Joseph, attended a few of these free webinars, and he talked to me about you guys, and he said, this is the blueprint, test drive it. So I did on paper trading, actually.
Cool.
100,000, and it works. I'll be honest. I'm up $13,100 after almost a month. Like
nice.
13%. Yeah. So yeah, I didn't want to put in real money because I really got hurt back in last year, actually. And that's which brings me to my next question. What happens when we wake up and we see another bloodbath, like minus 3,000 points or minus 4,000 points? Who knows? I know
you're rich. You'll be rich if that happens, Zach, because you got UVXY.
Okay.
We actually make a better return in bloodbaths than we do in.
That's my only concern, guys. Yeah, that's my only concern.
Well, that's why we got UVXY. So you're set to jet.
Yep.
So you might increase that position, like if you see it coming.
Yeah.
Okay.
Right now, I see a melt up coming, so we'll increase that after the melt up. We got to realize there's a $2 trillion stimulus deal, which is ridiculous, coming through. That's 10% of GDP, right there.
Okay.
So yeah, the bigger risk right now is to not be positioned for your currency falling in value and stocks melting up higher. Now, if I'm wrong and it doesn't happen, we're fine. We got a huge hedge.
Yeah, in Konstantinos, are you? Do you know what's your buddy's last name that sent you over?
I'll send you an email. It's Joseph.
Okay, cool.
He said he was on yesterday.
Okay, nice, very cool. Yeah, just want to make sure that I know who your friend is that sent you over, so we can give him a nice little referral and a thank you.
Okay.
And make sure we get him taken care of. Awesome. Thank you, Konstantinos. That's awesome. So it's 13,000 in a month that you did on the paper trade?
Paper trading, yeah. I didn't want to do real money because, like I said, back, last year, February, March, it was pretty tough. It was pretty rough. I lost Jeff. Like Jeff said, he lost 40%. I lost 45%.
Okay. Gotcha. And Konstantinos, thank you so much for that honest, data point of what you've done over the past month with the trial. That's awesome.
I wish it was real money, though, but it's all right. You got to test drive it.
We have nothing but time, Konstantinos. We have nothing but time, baby. And fortunately, it looks like we're going to have this quantitative easing cycle for, Jason, 5 years minimum? Who knows when the end of it's going to be. But yeah, guys, we're going to have a couple years of really nice retirement ride here and really a wonderful opportunity to really increase what that retirement will look like, maybe add some optionality to what we're able to do with that retirement. Okay. Okay, cool. Let's see here. Kay says she's up 11% yesterday with TQQQ. Nice, Kay. Did you take the other positions too? Okay. Okay, so Kay just went all in on the TQQQ, guys, so don't do that. We don't recommend that, but good to hear, Kay, that you made 11% doing that. Okay. And Kay is in Queens, New York. We had a great conversation yesterday. Very nice. Okay. So beautiful. Okay. Anyone else, guys, that has a free trial? It's on a free trial that puts some either real capital behind us or paper. Like Konstantinos actually made $13,000 on a $100,000 paper trade over the period of about a month. Hey, Catherine, go ahead.
I put in some into TQQQ. I don't know if you can hear me.
Yeah, we can hear you. Go.
I put in some into TQQQ, the 3 Qs.
Okay.
I'm up on that quite a bit.
Okay.
I'm very happy with that.
Did you get the other assets as well?
I tried some of them and I wound up ditching the silver. It was dragging me down, and the VIX, I just think it's a little bit high right now. I'll probably get it later when it's lower.
Okay, so don't do what Catherine is doing here, folks. And that's great to hear you made money with TQQ, guys, but it's the whole point of risk parity, right, is to build the other positions so all of your assets counterbalance each other and you take the safest ride possible, right?
Well, eventually. It's just, it was going down, so I just didn't like it dragging me down.
Sure.
I went into copper. I did that, and the Bitcoin thing. Those are, doing well. They're okay. They're not really surging great, but they're up a little bit.
Sure. Okay. Well, it looks like Kay made 11% from yesterday to today on her TQQ position. So that's good.
It's hard not to love that one.
Right.
Yeah. That's great.
Right. And that's why it represents, folks, the largest percentage of our portfolio, but we're just not net long the TQQQ without any protection, right? Because that's riding the motorcycle on the helmet, without the helmet, right? We want
I have a lot of other things in metals that I had bought quite a bit of time ago when it was really cheap. So, I mean, when things surge in metals, I do very well, but when they go down, I usually get killed. Today I'm not getting killed because of that TQQ,
Yeah. So, and perfect example there, right, Catherine? You want to counterbalance all of your assets, right? And you don't just want long growth in metals, right? You want a little bit better exposure, right? So, what the tank looks like, right, guys, is not only do we have our growth position in the TQQQ, but we also have our currency deflation hedge with GBTC. That works better than any metals currently at this point. And that's why we actually switched out our metal position. We took a $12,000 profit on it in January, switched to GBTC. I'm now showing an open profit just shy of $10,000 on that position already. And then we also got into the copper miner ETF. That's really a long-term play, Catherine, right? That's going to take time, but holy moly, is that a good opportunity.
yeah.
They're going to be pulling more copper out of the earth than ever.
Yeah, I had bought Freeport McMoran in the past, and it's doing very well.
Okay.
Are there other coppers? Are there other coppers besides just that one that you would recommend?
So we just do the ETFs, Catherine. We don't like to ride the motorcycle, right? We like to eliminate risk, not create more of it at every opportunity.
Okay.
Okay, so
Right.
so yeah, and that's the general gist, guys, of why we use ETFs instead of individual companies, right? And we will once in a blue moon, if we just see a dead obvious opportunity, like Moderna was a play last year that we used an individual company. We actually did use Freeport for a little bit as well, but yeah, it's just so nice to eliminate individual business risk by owning ETFs and owning baskets of companies instead. Okay,
Okay.
yeah. Very nice.
Okay.
Okay.
Right.
What other
Thank-
questions did you have? Did you have any questions outside of just telling us about the gain on the TQQQ?
I guess I missed what you were saying about the some of the pro stuff, the Asia thing. What was that? EDC or EPC?
Yeah. So Jason, if you want to go ahead and bring that up, and yeah, Catherine. So this is what our investors typically, $250,000 to about 10 million, really love to get built out. Because it has the most diversification. Not only does it eliminate individual business risk, but it actually eliminates geopolitical risk completely as well. It actually eliminates continental business risk as well. So this is what our millionaires and multimillionaires really, really like.
That one in particular,
Yep.
and the UPRO, that one also.
Yep. So yeah, you can see all of the tickers on the offensive side, and then all of the ticker on the defensive side is your UVXY at a larger hedge at 20% here compared to the safe alpha.
Okay.
Okay. And so with this portfolio, guys, if we got a stock crash, I'm not kidding you, at a 20% allocation, if UVXY, let's just walk through the same scenario of Q1 2020, right? Mid-March, mid-April, that UVXY position goes up 1,227%. Well, if that's a 20% position, guys, no joke, you've just doubled
Yeah.
your money through a stock crash.
Yeah.
Okay. So that's,
Mm,
and anyone that's that replied that they're hesitant due to losses in 2000, 2008, Q1 2020. Boy, what a beautiful portfolio set that is, right?
yeah. It's just that doesn't it look like we're kind of moving into a more of a bullish environment than a bearish one?
Yeah.
I mean, I don't really
And
anticipate any more corona disasters around the corner. We kind of
yeah, so we're
hit the
certainly
bottom, I think.
long-term bullish, Catherine, but black swans come unexpectedly. They don't
Yeah.
come because everyone's anticipating.
Right.
They come into the market unexpectedly. That's why it's called a black swan, right?
Right.
And so even with that in place, even with all that hedging in place, we're already up over 17% for the year in this pro portfolio, Catherine. Okay, and that, I mean, look at your outperformance to the S&P 500. I think it just turned slightly positive actually for the year on the S&P 500. Okay, so let's say if it's at 0.1%, I mean, you do the outperformance factor, however you want to do that math, it's going to be pretty substantial. Okay.
Hey.
Nice. And wonderful questions and commentary there, Catherine. Anything else?
That's all.
Okay, awesome. And thank you, Catherine. I think that's helpful for people to understand why we're always defensive. And even with huge hedging in place, guys, if you're positioned properly, it doesn't matter. You can still get massive performance. Okay. So yeah, it's all about always having safety. And there's a reason, guys, why every single billionaire investor on the planet has downside protection so they can sleep at night, right? And so they can pile tons of money into the market, okay, and sleep like a baby at night. That's why we love the system. That's why our clients love the system. That's why we've gone from literally 0 to over 1,000 customers, and gosh, not too long of a time span, right? And it's pretty cool. And certainly, Catherine, if you're interested in more aggressive portfolio sets, we have those as well. Our Absolute Alpha Bootcamp in just 3 months has made, I think it's just shy of 50% return at this point. So that's our most aggressive strategy. And then our cryptocurrency portfolio is up over 113% when I looked this morning in under 2 months. So if you want the more aggressive stuff, Catherine, we absolutely have that too. Okay. Beautiful. And great questions. Super helpful for the group too, to really understand all of the different portfolios we do offer. And so Catherine, actually Jason has on the screen for you the Absolute Alpha Bootcamp. Okay. And yeah, these are assets that are going to move much quicker. Smaller asset classes, right? But holy moly, does this thing move quicker.
Okay.
Okay. So yeah, so if you guys are interested in learning how to make 50% in 3 months with the portfolio set using ETFs, not being pigeonholed into individual stocks, this is how you do it.
Okay. All right. Very interesting.
Very cool. Awesome. Okay, and let's see here, Bernard. I saw you have your hand up. Go ahead, bud. Hey, Bernard, looks like your microphone is open, and then we have Daniel coming behind you and Eric as well. Oh, go ahead.
Hello.
Hey, Bernard, how's it going?
I'm good. I'm just new at this. I mean, I just got an invitation, so I'm just new here. So I'm just trying to figure out what this is all about. I have been investing in stocks, but this is kind of new to me. So I'm just wondering, what it's about. And
Okay, cool.
I didn't start in the beginning because I just got it late, the message.
Okay, cool. So a couple things, Bernard. So what we do is we actually design portfolio sets for you to mimic behind our strategies. Okay, so you do that with your brokerage account. Okay, and yeah, another really cool thing too, Bernard, you can actually click on the text message and the email we sent you earlier and actually replay that entire webinar too, just when you have some time, either tonight or while you're commuting or before you go to bed or something. You could always take a look and see the entire presentation A to Z. Okay.
Appreciate it. Thanks a lot.
Absolutely, Bernard. Thanks for joining us here today, bud.
Thank you.
Yep. Thanks for keeping us safe. Appreciate it. Okay. Very nice. And Daniel, Eric, let's see here. Anyone else out there, guys? Feel free to jump in, ask questions. Let's get some portfolios built here. That's the point of the trial, guys. Make sure you guys have that opportunity to make some money with us. Test drive the program. Okay, see how it works. And hey, you could be like Constantinos that did $13,000 return on a paper trade in about a month. So that's super cool. And guys, yeah, if you don't want to use real capital for whatever reason, just paper trade it. Okay. Yep. And Constantino said she got lucky, but not next time. Follow the ratios. Yep, absolutely, Constantinos. I love it. And I love that our trial members are really figuring out how this works here. So great job there, bud. Constantinos gets an A for today. Okay. And Daniel, go ahead, bud.
Yeah, I'd like to try it out, but what's that's the initial cost right there, the boot camp.
Yeah, so you want to do the boot camp?
Yeah.
How much capital do you want to use, Daniel?
I don't know. I'll have is $5,000 in my trading account.
Okay. So Jason's going to get that built out to you for you for $5,000. So just go ahead and write down what's on the screen there, Daniel.
Yeah.
Okay. All right. So looking good there.
I don't know what I write down.
Yes. So just you're going to see the tickers on the left-hand side. Okay. And you're going to see the number of shares in column E. Okay. And what I'll do there, Daniel, is I'll actually just shot that and send it over to you. Okay. And then let's see here. Okay. Okay, and someone in San Diego said they had to run, but they're wondering why we got out of AGQ and ERX. Yeah, guys, we replaced them with better assets for this point in time is the easiest answer too. So very cool. And whoever was in San Diego, thank you for that. Okay. Okay. So let's see here. And sorry about that, guys. I'm going to go ahead and screenshot this for you here, Daniel. Okay. And oops, it's not on the screen anymore. Okay. Okay. Did you get all those written down there, Daniel?
No, not yet. Let me see. I don't know what to write down really.
Okay. Jason, can you go back up to the boot camp for the 5,000, and then I can write that for Daniel, and I can screenshot it for him and send it to him.
Yeah, it's not on there.
God, that's so flat.
Okay, cool. So that's it right there, and I'm going to screenshot that, Daniel, to send it over to you. Okay, and I almost have that to you. Give me just 1 second. All right, Daniel, coming over to you right now, bud, in the chat box, okay? Do you know how to access the chat box?
I'm not really sure. They always say chat, so I don't know. I really never talked to nobody. Just you now.
Okay. Do you have someone next to you, Daniel, that's used Zoom before?
No, I don't have nobody next to me.
Okay. All right. Okay, cool. So Daniel has the screenshot there, and Daniel, just feel free to access that in your Zoom technology, bud. And if you scroll down to the bottom area of the screen, you will see a menu bar. Then you're going to see a chat icon. Just click on that, Daniel, and that will show you the screencast we just sent to you, so you can get that built out. Okay. All right, Eric, go ahead, or Nadine. You all are next in line here, and please feel free to go first, whoever's ready.
Yes, so I'm looking at your screen here with the, what is this one called? The I don't see a name on it, but it's a asset location. But it is the one that was in the 1,000.
Yeah, let's see here. It was Matthew, right?
Yes.
Okay, and yeah, Matthew, which portfolio were you interested in? We have the Absolute Alpha Bootcamp, we have the Safe Alpha, and we have the Pro. Pro is the most conservative. Safe Alpha is kind of in the middle. The Absolute Alpha is the most aggressive.
So this is the Absolute Alpha we're on. Well, what I want to know is, costs and price and so forth, because, I want to know what I have to invest. And the cost to do that and so forth. How do we pay for the service and things like those?
Yeah, absolutely. So Matthew, feel free to send me your number and your email, bud, and I'll give you a call after the webinar, and we'll cover that. Okay, and we'll walk you through each portfolio, see which one may make the most sense for you. Okay, and maybe it's a combination of two portfolios, maybe it's just one. But send me a message with your name, your email, and your phone number, Matthew, and I'll be happy to give you a call after the webinar. Okay.
Okay, do that through the chat.
Yes, please. I appreciate that, Matthew, and look forward to speaking with you, bud.
All right.
Okay, cool. Okay, guys, and let's see here. Who wants to get a portfolio built out, guys? The point of the free trial is to help you build out a portfolio so you can test drive it just like Konstantinos did and show a $13,000 profit in that time. Or heck, maybe you'll be like Ron Steger and make 97 Gs. Not to say that you're going to, but that is our best profit to date so far. And we did just have 5 people in the month of December that actually made more than $40,000, guys, with their free trial. Okay. So pretty cool. And Constantinos is just saying it works, folks. I wish I had real money invested. That was awesome, Constantinos. That was really cool. Very cool. And thank you for that, bud. Okay, Eric, can we get you a portfolio built, sir? Okay, and yeah, all the people that had more than 200,000 to invest, too, guys, just let us know what your cash fire looks like, and we'll get it built for you. If you have 50 grand in cash that you want to put to work today, let us know what it looks like, guys, and just tell us an exact number. We'll punch it in, and we'll get you guys some portfolios built here live. Okay. Okay, let's see here. Okay, and how much would you like to use, Recon? And then we just need your full name and your cell phone number too for 50,000. Okay, and which portfolio set would you like to build out, Recon? The Safe Alpha, targeting 25% a year, the Absolute Alpha Bootcamp, targeting 100,000 a year, or the Safe Growth Pro, targeting 20% a year, even though we're almost there. Okay. And Recon, yeah, just let us know which portfolio set you'd like to get built out there, bud. Okay, guys, and what you see on the screen here. Okay, awesome, Recon. Thank you, bud. Okay, he's getting his info typed in. Appreciate that. And just real quick while he gets that typed in, folks, so what you see on the screen is our Safe Growth Pro. So this is the portfolio that's going to get you the most diversity possible. Okay, you actually have exposure to 9 uncorrelated assets. Okay, and that's going to be the safest way possible, folks, to grow your money. Really, this is what our clients with more than $250,000 to work love to utilize. And really, we have some people in the 7-figure range, and we actually have one of our clients potentially backing 18 million out of a commercial real estate project and going behind this. So pretty neat to see the level of confidence that our clients are starting to build into these portfolios. Okay. All right. Okay. And Dale, if you can let us know which portfolio you want to have built out, bud, we'll go ahead and help you do that. Okay, and I know I've missed about 3 calls here, so if you are calling in, I apologize, but I will call you back as soon as I can. Okay, okay, the Safe Alpha, Recon? Okay, nice, and thank you there, Dale. Got the number there. Okay, and the aggressive portfolio set. Okay, beautiful. We're going to get that built for you right now there, Dale, and thank you for typing in your name, your phone number, and your email. We will get that screenshotted for you. And Jason, he's going to go ahead and do the aggressive, so the Absolute Alpha Bootcamp portfolio set. There we go. Perfect. So guys, can you see on the screen here how all the share ratios change? Right? And so what we're going to do is highlight that. Jason's going to take a screenshot and then he's going to get that sent out over to you. Okay. So the shares is what you want to focus on in the tickers. Okay. Cost is irrelevant. Price per share is irrelevant, guys. What is absolutely critically important is getting those ratios dead on. Okay. Beautiful. Okay, Jason. And did you guys want me to, Jason, did you want me to screenshot that really quick or?
Yeah, I've just been letting people write it down so they have it on their own piece of paper. But if you want to take a screenshot, go for it.
Okay. Dang, my phone is ringing off the hook. So I will call you back, guys, if you are calling me, if you're in the webinar.
Yeah, these work in 401ks also. So you want to get it to TD Ameritrade if possible. But
Yep, absolutely, Constantinos. So as long as you have self-direct control of that that 401k, you should be good to go. If you don't have self-direct control, what a lot of our clients are doing is actually mimicking kind of the ratio of how we're in the positioning that we have as well, right? So that is something you can. Oh, okay, yeah, Constantinos. Yeah, if you have self-direct power, dude, you're good to go on that, bud. Yep. Okay, cool. Beautiful. Yeah, if you can self-direct, Constantinos, do that as well. And then, and if you can't self-direct now to the 401k, just ask them for the ability to do that. Okay, so that will get you that the ability to grow that money safely as well. Okay, and outperform the advisors. Okay, looking good, folks. So really good interaction here. Okay. So yeah, guys, and just Constantinos asked, do you give advice 401k? So guys, so any 401k, any IRA, any RISA account, okay, any TSP if you're up in Canada, as long as you all can self-direct those accounts, guys, you can absolutely build out our portfolio set. Okay. And just for me, guys, I'm using my 401s, my IRAs, right, and my cash accounts behind the positions we have, right? So yeah, absolutely, guys, and great question, Constantinos. That was great, bud. Great for the crowd to hear those questions too. Okay. All right. So Dale, you have your screenshot there in your chat box there. Do you see that? Okay, Dale. Okay. Okay, and Matthew wants to do, it looks like 2,000. Okay, beautiful. Awesome, Dale. Okay, beautiful. And let's see here. Matthew wants to do a $2,000 account. So yeah, we could get you a screenshot built there. And which portfolio would you like to do, Matthew? The Absolute Alpha or the Safe Alpha for the 2,000?
What's the difference?
Yeah, great question, Matthew. So the Safe Alpha has diversification between 150 different portfolios. It's engineered a little bit less aggressively than the Absolute Alpha Bootcamp. That's engineered to give you absolute alpha. That's the focus of the portfolio to get you as much growth as possible. We're targeting 100% annualized returns with the Absolute Alpha Bootcamp. We can just call it the Bootcamp for easy nomenclature. Okay, so Bootcamp targeting 100% return, Safe Alpha targeting 25% return. What would you be more comfortable with, and what aligns better with your investment goals, Matthew?
I mean, the absolute is good. I mean, whatever is have the potential to bring the greatest return right now.
Yeah, so great question. So definitely in the Absolute Alpha Bootcamp, that's going to be our most aggressive strategy.
Yeah, I mean, no matter how we take it, we're taking a risk anyway.
Yeah, right. There's just the assets are going to be smaller, so they're going to be more volatile, but conversely, they'll move faster too, right?
Right.
Okay, cool. So yeah, and then just jot that down there, Matthew, and that's what you can use for the Absolute Alpha Bootcamp to allocate $2,000. Okay.
So you have to open a trade account to be able to do this. Where would I trade this?
Yeah, so we recommend TD Ameritrade.
Mm-hmm.
Okay, they have the highest level of customer service of any U.S. broker. So we want to only recommend the broker that has the same level of white glove customer service that our firm offers. So we exclusively recommend TD Ameritrade. If you're in the States, right? If you're outside of North America, Interactive Brokers is good.
Yeah, I'm in the States.
Okay, awesome, Matthew. So yeah, bud. So yeah, if you don't have an account there, they're by far and away the best brokerage to use. Okay.
Okay. So how do you guys become involved in setting up this account?
No, so that would actually be illegal for us to help you set up your own financial account. But it's really simple, Matthew. It'll probably take you about 10 to 20 minutes. Okay.
Right.
And if you have any questions, you can just call TD Ameritrade too.
Okay.
Okay. Awesome. Yeah. And if you have any questions, tomorrow, bring them to the webinar. Okay.
All right.
Beautiful, bud. Yeah, guys. So just real quick on that, you will need your own brokerage account to replicate our trades, right? And you can use any brokerage under the sun, but if you don't have an account open now, we do recommend TD Ameritrade. They're phenomenal. Okay, cool. And Eric, let's see here. Eric, Catherine, Daniel, let's see here. 13012, Alice Carr, Bernard, Cam, ES, Gary, Ken Lucky, Constantinos, MG, Rakan, Ron, Manahar, Polly Forrest, and Robert. If you guys have any questions, jump on in there. Okay, I'm going to go ahead and unmute all the microphones. Okay. Okay, guys, so it looks good. So it looks like I think on my side here, it probably will help to do some education, okay, to kind of explain what our portfolio sets are. It seems like there's a little confusion there. So I'm going to go ahead and transition over to my screens, guys, and we will go ahead and do that. And Jason, thank you so much, bud. The crowd was a little bit shy to this to get some portfolios built out, but we did have a couple built out. So, hey, at least we got 2 or 3 built out today. That was good. We like to do 10 or 20. Okay. So very good, guys. So I'm going to go ahead and transition over to my screens here. Stick around, guys. We will cover some more great information here before you guys do take off for the day. Okay. So just real quick, guys, we're going to talk about a few things here and just move through the rest of the presentation here. Okay. Before I do that, let's take a quick check on the portfolio set here. Okay. Let's once again compare to the S&P 500. Let's update this Yahoo Finance page here on the right to see if we have an updated P&L on the S&P 500 today. It doesn't look like it. How weird. You know what? Let me see if I can get that on my phone actually just while we're looking at this, just so we can give you guys a dead on accurate number of what the S&P 500 is year to date here. Okay, give me just 1 second here to do that. All right, and okay, so let's see here. So yeah, S&P 500 currently to date, guys, should have just passed. We should now be at a little over 1% profitable for the S&P 500. Okay, so since we started, I guess this is pretty delayed. Let me actually see if I can get you guys a better S&P 500 return to date live number. Let's see here. Let's see if White Charts actually has a live number here. Okay. Yeah, no, that's not correct. Dang. Okay. Well, we're running about 1% up for the S&P 500 for the year, and it looks like you actually have to pay for the data to get a live reading on the S&P 500. Let's see here. Maybe Business Insider. Okay. Let's see here. Is it actual to date? Okay. Okay, so right here, guys, this looks pretty accurate, fairly accurate anyways. Okay, so this is the S&P 500 to date. Okay, it's now up 1.78% for the year. Okay, conversely, our Safe Alpha program, which is really popular with our clients that have somewhere between 100,000 and 500,000 to invest, that's been just the most popular demographic it's kind of fallen into for investment capital. Okay, that's produced a profit this year of $130,000 or a 13% profit. So if we take a look at our Safe Alpha program here, so if I just come over here and write out, Safe Alpha, okay, just so we can have really some data on this here. Okay, so safe alpha, that is running a profit of $130,000 or 13% here. Okay, so pretty good, massive outperformance to the S&P 500. I'm just going to finish writing this out here. So safe alpha. Okay, and that's at a 13% return, as you can see right here. And if we compare that to the paltry returns of the S&P 500, well, let's do the data and see what the difference is here, guys. All right, so let's take a calculator. Real simple mathematical calculation here. You guys will learn about Jason and I. We obsess over math. We do a lot of mathematical calculations, a lot of mathematical modeling. Okay, and I love math because you cannot argue it. Right? It's empirical. You can't argue math, right? So let's go ahead and take our 13% return, okay? And we take that and we simply divide that by 1.74%, right? Because why? Well, that's the return of the S&P 500 to date here, okay? As you guys can see that right here. Can everyone see that okay? What our returns are here, what the returns are of the S&P 500 here. Okay, and now we're going to simply hit the equal button on the calculator here. Okay, we could see our outperformance to the S&P 500 is 747% so far year to date. Okay, once again, we just took our overall profit for the year for the safe alpha. That's about 13% when we took the data. Okay, we then looked at the performance of the S&P 500. At the time, it was 1.74. That has ticked up to now 1.75 here. But for the year, guys, that's an outperformance. Once again, 7.47 times or 747%. So I'm just going to write this over here. So 747% outperformance to the S&P 500 by owning a basket of stocks with a huge hedge in place, okay, and the best fiat currency deflation hedge in place as well, which we're actually looking for that to be a massively bullish asset for us actually over the next 5 years or so, okay? So best performing ETF on planet Earth today, in there, check. That's our largest position. Best currency hedge on planet Earth today, check. Also a really bullish position for us over time. Okay, the best exposure possible to the Belt and Road Initiative. Okay, then to basically the all of the infrastructure that's going to need to go in all over the world to harness EV vehicles, and then also a play into a blue Oval Office here in the United States of America. Check, check, and check with COPEX. Okay, it's going to need copper for all of those things to happen. Then we have our volatility hedge, folks. That keeps us safe at night. If there's ever a crash in the market, that is our disaster insurance, and we'll cash in that insurance, reposition onto the long side, so you can sleep like a baby at night. Okay? Right? Okay, cool. So yeah, guys, that is what it looks like. And the outperformance, once again, is 747% to the S&P 500. So just quick on that. Any questions, guys, on that math real quick and just using empirical evidence to take a look at what we do for our clients? Okay, good. Daniel, did you have a question there, bud?
No, I'm just on my phone. I'm just have trouble seeing what's going on.
Okay, yeah, you can always watch the replay, Daniel,
Yeah.
on your laptop, bud, and then you can see everything a little bit better too. Okay.
All right.
Awesome, bud. Well, hey, thanks for coming, Daniel, and yeah, that screenshot is in the chat box if you can find it. Okay.
Okay, so I just have to go create my own trades? Did I get insurance or all that?
Yeah, just look at that screenshot we sent you. Follow the exact instructions that are inside of it, and then you're good to go.
Okay.
Okay.
All right.
Awesome, Daniel. Thank you, bud, for coming out. We appreciate your time. Okay, cool. All right. And ES said portfolio for 70K in the safe alpha. Okay, so you know what, ES, send me your name, your phone number, and your email. Jason's already left, right? We do that portion with Jason, our chief investment officer. So he's left, but if you type in your name, ES, your phone number, and your email, I'll be happy to send that to you after the webinar. Okay, but we have a group here of 30 people that we needed help with the rest of the presentation with as well. Okay, and I know you may have came late, ES, and would love to help you. So just type in your name, email, and phone number to the chat box, and we will definitely get you that screenshot for the $70,000 Safe Alpha portfolio. Okay, good. Okay, guys, so real quick on that. Now let's take a look at our Absolute Alpha Bootcamp. See what that outperformance has been. Okay, and woo, huge push up for that portfolio today. It's up over 4% for the day. And hold on one second, guys. I got people on my chat here trying to ask some questions here. Okay. Okay, guys, so sorry about that. Had to tell someone I had to jump back into the webinar. Okay, so looking good, guys. Now, this is our more aggressive setup. This is our Absolute Alpha Bootcamp. Okay, so this is our most aggressive strategy, guys. We started this account with just 100 grand. It's performed phenomenally for the day. It's up over 4%. So huge outperformance to the upside here. Smaller asset classes, once again, guys, different ratios of all the assets, different assets as well. But this is our most aggressive strategy. And our clients that really have less than $50,000 exclusively pretty much go with this portfolio, guys, so they can grow into a larger account and then use our more conservative portfolio set to give it more protection down the road. Okay, very nice. Yeah, Manahar. So Manahar Pasmarty asked about the performance. Yeah, so it's right over 50% over the last 3 months on the equity side. And then let's take a look at the boot camp side, Manahar. It was over 130. It was over 110% this morning. So let's see what it's at now. It does move quicker. So let's see here, and let me let this pull up in just a second, guys. Looks like it's getting all loaded up. And let's see what that, okay. So yeah, it's bumped up a little bit. And the crypto side, guys, is up 114.52% in just over 2 months. Okay. So that was our most aggressive there. Oh, it looks like Google glitched on me there when I did that. Oh, there you go. So it is 114.79%. And pretty cool, guys. This bootcamp portfolio is a freebie. We were actually supposed to break it out into its own product. We were too busy bringing on customers in January. So that is actually still a free bonus. You get the portfolio, the crypto portfolio, with this stock and ETF portfolio as well on this side. So yeah, but if you really calculated the two, Manahar, it'd be even a little bit higher. But yeah, that's what those two have for their return. This has been inception, guys, for just over 3 months. This is just under 2 months on this one. Okay, so equities ETF side, roughly 50% profit. On the cryptocurrency side, 114.79 here to the tick. Okay, very nice. Okay, and Marcus, if you can just type in your cell phone too, bud, then I'll have all the information I need. And thank you, Marcus. I appreciate that, bud. Okay, and looking good, guys. Okay, so let me just grab Marcus's info really quick. Go ahead and paste that in. And then Marcus, just send me your cell too, okay, bud? All right, guys, so looking good. Okay, so let's go ahead and basically close out the presentation here, guys. We're just going to cover a couple more things in depth, and then whoever wants to go ahead and get signed up, we do have a webinar only special for you, which we'll cover in just a minute as well. All right, guys. So you saw one of my favorite quotes. You're going to now see my favorite rule. Okay, so rule number 1, never lose money. Rule number 2, don't forget rule number 1. That's why we always have our downside hedges built in. And who wrote these rules? Well, the smartest and most successful investor of all time, Warren Buffett, the Oracle himself. Okay, now this is my next favorite quote, and this is the most really, guys, when it comes to investing, this is the most important quote you need to know for the next until quantitative easing is over. Okay, and I think that's going to be a 5-year process at minimum here. Cash is trash. Okay, so what's the number one unknown risk to U.S. investors today, guys? It's cash in your account. It's guaranteed to lose 10 to 15% of its buying power. Okay, so why go backwards every year at 10 to 15% a year when you can go forwards? Grow a garden for you and your family for the rest of your life. Okay, because look, if you have $1 million sitting in cash right now and you stay in cash for the next 5 years, your buying power is going to be $500,000 or less in the next 5 years. Okay, you hold it for a decade, folks, your buying power is just diminished by 90%. Why do you want to do that when you can grow your capital instead? Okay, nice, Ken. Very nice, bud. Yeah, I will send you a link here in just a moment, Ken. Do you have just a few more minutes to go through the rest of the presentation, bud? Okay. So did you know, folks, that your cash is sitting is burning up, sitting in your brokerage or bank account? Okay. Well, why, folks? Okay, the Federal Reserve is printing money at the fastest pace in U.S. history. Okay, not only is the U.S. printing money at the fastest pace in history, and every market in the world, guys, every central bank on planet Earth today is printing money at the fastest pace in their history. Okay, every major government, every major central bank is doing that right now. Okay, so literally, if you're sitting on cash, it is in a fire. Okay, I picked out this image on purpose because I saw the moment quantitative easing started, I looked at my bank account and I went, oh my God, there's so much dead money sitting in there if I don't invest it. Right. So what I did, and me personally, guys, is I set aside what I need for the next year as far as the bills that I need for my family and I. Okay. And I took every last red cent that I had outside of that and I immediately invested it. Okay. And sure, it took a day or two to come over or whatever, right? But I don't care about that. But the moment I could, folks, I got it into the market. Okay. And boy, has that been wonderfully successful for my family and I. Okay. And guys, look, the Fed is going to ensure that the value of your dollar continues to burn. And guess what? A lot of people don't understand this, but the richest people on the planet have 99% of their net worth in the stock market, folks. Okay, they own the Fed, and they're going to ensure that they turn themselves from billionaires into trillionaires for the first time in U.S. history. Okay, and I know that, and I understand that. And I understand their level of control over governments, over central banks. Okay, our goal here is to teach you the tip of the iceberg on that. Right, really go into major depth as a client. Okay, but guys, look, if I can't beat them, I'm going to join them. Okay. And I realize as just a normal guy that came from a normal family that I'm not going to go ever compete with the billionaires. Right. I understand that. I'm a realist. I do statistical analysis all the time. My statistical ability to get there is probably zero basically at this point. So, but that's not to say that I can't take where I am today, and whether you're in 50 grand to invest or you have 500,000 to invest or 5 million to invest, why don't we take those ecosystems, guys, and go 4x our net worth, just like the billionaires are going to do before this quantitative easing cycle is over? Let's do the same thing, right? So if you have 5 million, let's go to 20. If you have 50 grand, let's go to 200. Okay. If you have 10 grand, let's go to 40, right? and could otherwise, guys, your cash is just going to stay on fire. Okay. Okay. So just really quick too, guys, we have a webinar only special available today. So stay tuned to see the savings you can take advantage of today. And just an important note, guys, we do 3 spots per day for that webinar special. Okay. So how can we help you and your family? Well, folks, we have 3 portfolios you can build with us today, depending on your goals and risk tolerance. Okay, we'll cover each portfolio in great detail in the following minutes. Jump in and ask questions during this process to make sure the portfolio is perfect for your goals. Now, folks, I'm going to go ahead and unmute all microphones now so you can speak with me directly. Okay, and Ken, it looks like you have some good questions too. Feel free to go ahead and unmute your mic, bud. Would love to hear any questions live, and feel free to just ask them live. Okay, Nadine, Rakan, which I believe is Dale now after I saw your the info you posted in, Manahar, okay, and Nitivot, I think is how I say that. Maybe that's French, and pardon me if it's not. Okay, so I have unmuted everyone's microphone. Tim, you are unmuted. Robert, you're unmuted. Looks like we have the group there. Okay. Okay, guys. So if you have any questions while I move through this, just jump in and ask. Just hit the microphone unmute button. And to do that, folks, you can do that by scrolling down to this area in your screen. Okay. And once you see that chat icon, the chat icon should be right here. Once you see the microphone icon, guys, hit that too. That's going to be in this bottom left-hand corner. Once you hit that microphone icon, folks, you can speak directly with me live. Okay. All right, guys. So let's take a look. The first portfolio is Safe Alpha. Okay. This has been really popular for clients with between 100,000 and 500,000. Okay. They love this portfolio to speed up their retirement. It's great for investors looking to outperform the market in a safe manner, guys. Want to highlight the safety side of it, right? That's why we follow Warren Buffett's #1 and #2 rules. Always have downside built in. Take the safer route. Okay, guys, in the most volatile year that we've had since 2008, we had 80% less drawdown compared to the Dow Jones. Okay. This portfolio uses ETFs to be long or short specific asset classes. Okay, guys, there's minimal changes throughout the year. 2019, we only made 5 changes to this portfolio set. Okay, so think of kind of 5 to 10 minutes worth of work. Okay, and last year we did 10 changes, right? Obviously, much more volatile year, so we had some more changes. We did make 1 change in January to this portfolio set. Okay, we did lock in a $40,000 profit, taking that, and have already built in an additional kind of $18,000 in profit since we made that change. Okay. Now, it's had 150 hours of live education and Q&A with like-minded investors. No options are used, yet is massively outperforming the overall market. As we just saw in the live calculation, guys, that outperformance factor was 747%. Okay, my 7-year-old is following this system. You can too, and no joke. If you can click 4 buttons, folks, on your phone, you can follow this from your phone with your mobile brokerage account. And once again, we do recommend TD, but you can use any brokerage under the sun too. Okay. Now, the free bonus, guys, when you sign up for the Safe Alpha, is you're going to get a 30-day access to our Absolute Alpha Bootcamp portfolio. Okay. So the Safe Alpha trades and webinars, guys, are going to be Mondays, Wednesdays, and Fridays at 1:30 Eastern time. So you're going to be able to meet with Jason, your Chief Investment Officer, every single Monday, Wednesday, and Friday to continue your education with them. Okay, truly grow your brain, not only just your capital. Okay, so that is the Safe Alpha, guys. And if does anyone have any questions on the Safe Alpha at this point? Anyone out there? Hey, Ron. I see your microphone is unmuted, and I think it's the first time I've seen it unmuted. And Manahar, how's it going, guys? Do you guys have any questions at this point?
Not at the moment.
Okay, perfect. All right. And so jump in there, folks, if you do. And Ron, did you have a question too, bud? Okay. Looking good. Okay, and all right, guys. So let's take a look at our most aggressive strategy. Okay, our Absolute Alpha Bootcamp. This has been our most popular for 2021 so far. Okay, it's targeting a 100% annualized return. Okay, it's very attractive to investors that want larger risk and returns. This service has a stock/ETF portfolio engineered for massive growth. Okay, that's the point of this system, guys. Massive growth. It will be more volatile, obviously, right? If you're going to go for larger gains, you're going to inherit more volatility. It just comes with the territory. Okay, it's still going to have risk parity. You're still going to have hedges in place, but because this does move so fast, it will have the most volatility. Okay. Plus, we will send out other trade alerts for more exotic opportunities. And you guys will actually learn about a 10,000% return opportunity when you get your username and password and get into the module number 3. Okay. And changes will be made on a monthly basis to ensure maximum growth and really, guys, recalculation of the portfolio because it moves so fast. Okay. You're going to have 100+ hours of live education and training each year. You can have a sophisticated balance of core growth asset classes. And folks, as new growth asset classes hit the market, and they do about every year or so right now, we're going to add those into the portfolio set. Okay. Options are utilized to take advantage of individual companies at times. Okay. It won't be often, but we do issue those at times. Okay. Absolute Alpha Bootcamp members also enjoy additional cryptocurrency portfolio that's produced. It's not a 70% return, guys. It's now, I don't know what the past month is, you know what? And let's get that data here live just while we're doing the webinar here, just for full transparency. Okay. And let me go ahead and just go over here. Let's see what the return is on this for the year. Okay. And then I'm going to have to scroll over to this. So we're at 105% return, and I'll zoom this in for you guys so you can see that. Okay. So that's 105% return on the year for the cryptocurrency. Okay. So no joke, 2021, right? We're just looking at the return for the Absolute Alpha Bootcamp, and it is at 105% return for the year. Okay. So in just over a month, that's produced 105% return. Okay. And obviously, guys, cryptocurrency is going to have even more volatility than the stock and equity side, right? Okay. So the free bonus, guys, is a 30-day access pass to the Safe Alpha. So you get that when you sign up today. And you get exclusive live webinars and training every Thursday at 3 Eastern Standard Time. Okay. Any questions on that too, guys, on Absolute Alpha? Okay. And jump in there, guys. Don't be shy.
So with this, is your bootcamp included in this? The
yeah. So the Absolute Alpha is the bootcamp, right?
it is the bootcamp.
Yeah,
Okay.
and I put BC on here just because it wouldn't fit. Man, hard. Great question. Fine. No, great question.
I was a bit confused about all the terminology.
Yeah, no, and it is kind of confusing on the nomenclature, right? And my apologies for that. I just couldn't fit in the bootcamp word right here, so I used BC.
Okay. No
so, and thank you, Manhard. No, and that will help others. So I do appreciate that, bud. Okay. Any other questions, guys, on this portfolio set? Okay.
Question?
So yeah, go ahead, Barry.
Yeah. On the cryptocurrency, do we need a digital wallet to do the trading?
So great question, Barry. It's actually not going to be a digital wallet. Jason's going to have you actually connect to a direct exchange for a couple reasons. But really, more than anything, it's to get you exposure to the 9 best asset classes outside of Bitcoin, because we do own Bitcoin in the stock ETF side of the portfolio. Okay. But there is 9 of the other best cryptocurrencies that Jason has researched thoroughly. Okay. And he's been doing this now for 4 years, guys. Okay. But the 9 best assets outside of Bitcoin will be in the crypto side of this portfolio. Okay. And Jason's going to show you how to set it up through the exchange.
All right. So do we contact Jason or he contact? Because I have about $8,000 left over.
Okay. Yeah, Barry. So all of that, you're going to have a step-by-step guide that shows you how to set up everything A to Z in the members area.
Okay, great.
Okay. Yes, sir. Very cool. Any other questions, T. Barry? And great question on that. Okay.
I'm just a quick question. So
yeah,
the Absolute Alpha is a bootcamp, right? There's no Absolute Alpha portfolio as such.
Yeah. So the Absolute Alpha is the bootcamp. Okay. And it does have a stock portfolio, and it does have a cryptocurrency portfolio as well. Okay. So yeah, so additional cryptocurrency portfolio. And then I need to change my numbers on this, guys, but this is now, this is insane, but over 105% now in right over a month. Okay. So that is that one, guys. Now, last but not least is our Safe Growth Pro, okay, that produces 15 to 20% return annually. Okay, well, and that's last time I checked, we we're at 17% coming into the webinar for the year, but Jason's just been absolutely on fire. Just has just, I can't tell you how many people are sending me text messages each day thanking us and kind of bragging a little bit. But this one, guys, is very attractive to our investors with really $500,000 to $10 million to work with. Okay, this portfolio will show you how to trade like the top hedge fund managers without the 2% management fees and 20% performance fees. Okay, changes will be made on a weekly basis to ensure maximum protection. Okay, we're going to have 150 hours of live education and Q&A with like-minded investors. Okay, you're going to have a sophisticated balance of core asset classes. Folks, you simply buy the ETFs. Okay, options will be utilized to completely atomic bomb proof your capital. Okay, at times if things get real rocky, we will issue options on that portfolio set. Okay, our Safe Growth Pro clients enjoy paying an absolute fraction of what previously underperforming money managers, mutual funds, and hedge funds charge. Okay, I'm not kidding you guys. I spoke with a gentleman last week. He had a little over $3 million with a advisor that had a negative return for him last year and charged him just north of $43,000 to manage his money. And he had a drawdown for the year. Okay. $43,000 a year is what he was paying him. He'd worked with the gentleman for over 10 years. So think about that, guys. He, probably, I didn't ask him, right? Because I didn't want to go into detail of how much he paid this guy over 2 decades, over a decade, but heck, he probably paid the guy over $250,000 in fees, and he was not happy with his growth. And in fact, he did structure our Safe Growth portfolio, made much more than the cost of our service, and did sign up. Okay, so pretty cool. And he was able to literally, well, he's in the process of firing his former money manager, I should say. Okay. Let's see here. Okay, Konstantinos, bud, go ahead.
Yeah, I want to ask how long you've been in business for?
Yeah, great question, Konstantinos. So since 2017, okay, Jason originally created Portfolio Builder to start the first cryptocurrency portfolio he built. Okay, and so we've been in financial publication, Konstantinos, though, since we were literally 19 years old. We started our first financial publication company right out of college. So that was kind of fun, guys. And I'll give you guys the quick story real quick. So Jason and I, we had met in college. It was funny. We had a bunch of mutual friends, but we never met each other until college. We were both in business school when we met. He was interested in what I was doing with investments. I was super interested in what he was doing with his business. He actually had a staff of 6 or 7 of my, now some of my best friends, right? But it was really interesting when I met him. I was just really interested in e-commerce. That's what kind of he was doing and helping clients with was e-commerce. And he was flying around the world showing people how to build websites for their businesses to show them how to monetize things digitally. So I was super interested in that. I was always interested in the internet just in general. I thought that it was going to change the world at an early age. He was interested on the investment side. He won a stock trading competition when he was 16 years old in his high school. I started my first paper trading with actually my family friend when I was 16 too. And really meeting our family friend Gary was how we kind of learned more about risk parity. He made a fortune in 2000, made a fortune in 2008, did incredibly well on the upside. Long story short, he turned about 350K into 5.2 million in 12 years before he passed away of cancer. Okay, so that's where we initially learned risk parity. Started a business right out of college, hiring other gurus to produce products and services, in the investment world. And we worked with guys like Timothy Sykes and Chuck Hughes and John Thomas, the Mad Hedge Fund trader. Looked at potentially working with Jason Bond from Raging Bull. Thank God we dodged that bullet. But anyways, long story short, guys, over time we realized all these guys were producing super hypey products that were focused on teaching people how to make sandwiches and how to day trade and swing trade, yada yada. And so we were always interested in what Buffett was doing, what Ray Dalio was doing, what my family friend did to make money in all market conditions. So that's how we kind of formed into where we are today. So we sold out of our interest in our previous business. We did bring that business, our original business, to like 23,000 customers in 45 countries. Now we've been on our own, Constantino, since 2017. Okay. And we just have been having a blast, and we've gone from 0 customers to over 1,000. We're now in 19 countries, and we're just having an absolute ball helping people understand what risk parity is and why, and really translating our 36 years of combined efforts to understand risk parity into what our clients are able to grow their capital with today, and then their education and their brain as well, right? And so that's really the neat thing, guys, right? Teaching someone how to read a chart, like, I mean, I could teach my 7-year-old how to do that in like 10 seconds, right? Teaching people how to balance risk is something that's really just not out there. Okay. And really showing people what the super rich are doing with their portfolios, right? And what risk parity is, to always have downside protection, is something that just doesn't really exist on the market today. So, we really saw that disconnection. And so we started structuring equity portfolios as well using risk parity. And that's how we grew to where we are today, Constantino. So great question, bud. I don't need to, I don't get to relay that much in the webinars, but it is good to relay kind of the roots to evolution. But yeah, guys, we worked with 35 different investment gurus, hedge fund managers, you name it. Most of them were teaching their clients how to make sandwiches, how to do risky strategies. We didn't like, the results of all those strategies that we saw over time. And, the guru would make all the money. The clients would make all the money. I go out to collect the testimonials. There were no testimonials. Go look at our testimonials page today, guys. We get a new testimonial weekly at this point. Okay. But yeah, our whole thing now, guys, is client success. The only way you can get client success in this business is by using huge assets that we can't move, right? If you look at the option traders, the swing traders, the day traders, you name it, guys, they're just moving the penny stock traders. They're just moving tiny assets that they profit from, and then they screw their clients. Okay, look, guys, we can't move these markets if we try. Right? We'd have to have hundreds of billions of dollars to move these markets, right? And we don't have it, right? So really, guys, it's all about getting major asset classes that are counterbalanced, okay? And then just use that to grow your capital, okay? Great question, Konstantinos. Appreciate that, bud. Let's see here. Anyone else have any questions out there? And Konstantinos, did you have a follow-up question?
Yeah, no, it's funny you mentioned Tim Sykes. Yeah, I tried him out back in 2017. Yeah,
yep.
Those penny stocks, swing trades, day trades didn't work out pretty well. So
yeah, it's that, and it's crazy that they carved out a serious niche into that business. I mean, they're doing, gosh, $30 million in revenue probably, right, a year. And it's so sad because 99% of their clients are getting just hosed.
I don't know if it's true. I mean, he says he created 5 millionaire students. I don't know.
Yes.
Tim Gritani, Ronald
Yeah.
Wolf. I don't know if it's true. I don't know.
Yes, I know Tim Gritani. I know Sykes real well too. But yeah, Tim Gritani definitely had a 7-figure account last time I saw him, like 8 or 9 years ago. So yeah, he should be up there by now.
Okay.
But yeah, just the whole methodology, strategy, right? We'd go try to collect testimonials from those clients, Konstantinos. It was not pretty.
Well, you got to do it full time. You can't work in swing trade. It's impossible. You're gonna lose for sure.
Right.
Those guys do it on full time. I mean, they sit in front of the computer 10, 12 hours a day, pre-market, after hours. I can't do that. I don't have the time. I work full time, so.
Right. Yeah. Yeah. No, and I mean, we actually made Tim just do exclusively swing trading. It's still, we couldn't get testimonials. It was crazy. So yeah, that's when we decided, all right, enough of this business. Right. We had some business partners we didn't align with and stuff. So yeah, guys, we took the, we took the route to really help our clients. Right. And look, guys, we're not obsessed with making 20, $30 million a year. Right. I don't even want to go to that level, just to be honest with you guys. Okay. Cause look, I have a family and I love them more than anything in the world. Right. So I don't want that level of busyness in my life. Right. But and really, guys, for me, right, and I'm emulating my clients, right. I know we're all busy people. We're either focused on our jobs or our families or on our passion projects, or maybe a mix of all those aspects, right. So we have to do something that's not so rapid fire, right. The large asset classes, guys, look, it takes so much time to move these multi-trillion-dollar asset classes, right. So that's the best way to play it. And yeah, we're not going to go front on our clients, right? We can't if we wanted to, guys. This stuff is too big, too liquid, right? On the equity side of stuff, right? We can't move this stuff if we tried. I mean, look at the TQQQ ETF. I think it actually just passed $10 billion fund. We can't move that thing. Right? Like there's no way. And it's not like, so some of the option traders, the swing traders, all the day traders, right? They go position into something and then they go send it to 3,000 people. And then guess what? The price goes skyrocketing,
Oh,
but
I've been there. Oh yeah. I've been there.
no one gets what they get. Right. And then, all of a sudden they see this massive drop in value of whatever asset they've just positioned into behind their guru, because the guru has sold it. And then the trade alert comes out 2 hours later, right? And then by the time the client tries to get out of the position, it's too late. So yeah, that's a difference really, guys, in what we're doing. So pretty cool, guys. When you get a chance, check out the testimonials page here. Okay. And then everyone that did ask, I did post in the sign up link. Okay. So that is in the chat box. Okay, so Dale, that is in there for you. Ken, that is in there for you. Okay, so appreciate that, guys, and just click on that blue link so you can see the different options for you. Okay, and Ken, Dale, if you have any questions, go ahead and unmute your microphones, guys. Konstantinos, any other questions for you, bud?
Just the final one, just the last one. I don't want to take up your time. It says, what's the worst month or year you ever had, return-wise?
Yep. So we had an 11% drawdown month in the Safe Alpha last September. Okay. For the Pro, the worst drawdown month we've ever had was just shy of 10%. Okay. And I think the boot camp actually has some drawdown this month for the first time. Let me see. Let me go.
Actually, thank you for being honest, because other people say, "Oh no, we never had a loss."
Yeah. Let's see here. But yeah, that's not a way to earn clients for life, right, Konstantinos? That's what I'm here to do.
You're being very honest. At least you're telling me you had like negative return here and there, which I mean, at the end of the year, I'm still pretty sure it's going to be on the positive side. But
sure. Okay. You know what? And we did have a drawdown yesterday, Konstantinos. Okay, for February on the Absolute Alpha Bootcamp, but today it is swung to the upside. Okay.
Thank you.
My pleasure, bud. And thank you. Great question, and happy to be as transparent as possible. Okay. Very cool. So awesome, guys. And everyone that positioned into the boot camp yesterday, I think that said it was down 3% yesterday. So people that positioned in yesterday should be up over 5 with everything said and done. So beautiful. Okay, guys. Very nice. And Dale, Ken, were you able to locate that that link there, guys? Okay. And if anyone wants to do a combination package too, guys, just send me a message in the chat box, and what we can do is give you a little discount for people that combine 2 packages together. Okay. Now, just really quick to you guys, if you have less than 50,000 total to invest, type in your name, your cell phone number, and investment capital into the chat box now. Okay. Hey, my pleasure, Dale. Absolutely look forward to working with you, bud. And if you have any questions, give me a call too, Dale and Ken. My number is 505-322-7515. And if not, just click that link to get started. Okay. So, all right. Anyone in here with less than 50K? Okay. Type in your name, cell phone number, and investment capital into the chat box now, folks. Okay. Okay, guys. People, but oops, sorry. Anyone between 50 and 250,000, guys, type in your name, your cell phone number, and investment capital into the chat box now, guys, and I will get you a special there. Okay. Okay, looking good. And then last but not least, guys, okay, nice, Manahar. Okay, and I will get that to you in just 1 second there, Manahar. Okay, guys, now investors with $250,000 plus in cash. Okay, I'm going to invite you guys to go directly to portfoliobuilder.io/coaching to reserve my time for a one-on-one investment session. Okay, so it's just Portfolio Builder. It's not .com, but .io/coaching. Okay, very nice. And Manahar, did you want to do the Absolute Alpha Bootcamp, or did you want to do the Safe Alpha, bud?
I'll rather do the Absolute Alpha.
Okay, cool.
Bootcamp, better returns. But
okay,
actually, I really like to do the Safe Growth Pro, but I can't afford it.
Sure. Okay, and let me get you that for your scholarship there. Okay, and give me just 1 second, guys. And I'll get that over to Manahar. Manahar, we look forward to working with you, bud. Okay, and guys, and I tell people this, but I absolutely, Jason and I, we look at the opportunity to help you and your family grow, not only your capital, okay, but your investment knowledge. Okay, we absolutely look at that as an honor. Okay, because look, I know there's a little bit of commitment, right? Stuff that go behind putting money into investments. I understand that, guys. Look, we take an absolute honor to helping you. Okay, and look, we have a lot of money in the markets too. Okay, look, we're looking after our clients, we're looking after our family members, our friends, right? We got a lot of people really invested in what we do. Okay, so just understand that, and we absolutely look at it like an honor. Okay.
Can you just give me a number again? I'd like to just talk to you, possible.
Yeah, Manhart, it's 505.
Yeah.
Okay. 322-7515.
Okay, great. Thank you. Sorry about that.
Oh no, you're good, bud.
No, you gave the number earlier. So I just want to talk to you. No,
you're good, bud.
Yeah,
we posted all over my website, all over our website, so no worries.
Yeah, no, I know. No, I know. I've seen it before, but I just didn't write it down in the right place.
Okay. Beautiful, bud. Okay, cool. And then check the chat box too, bud. Okay.
Yeah.
Okay, guys. So just real quick. So many of our members make the cost of our annual membership or more in a few weeks after they sign up, and our trading plan takes less than 2 minutes to execute at our set time of 1:45 Eastern for Safe Alpha and 3 Eastern for Ultra Safe Growth and Absolute Alpha Bootcamp. Okay, my challenge to you guys is to see how much you can make over the next year and coming decades. Okay, that's really, guys, the goal. All right, so just real quick, guys, want y'all to see Jason and I's faces. Okay, that's Jason. That's me. You're hearing from me now. Okay, Jason's the Chief Investment Officer. Once you are a client, guys, Jason's going to be your go-to person for any and all investment questions. Okay, before you do get signed up as a client, I'm going to be your go-to person for any and all investment questions regarding just where you guys are in life, right? Regarding what we're doing with our portfolio sets and why. Okay, you won't hear from Ryan much unless there's some type of technical issue, but he's awesome on that. Okay, he's a partner with us. Now, Damien he's actually, guys, one of our crypto clients turned team members. Okay, and he's actually a partner in the business now. great guy. David and his family just recently moved to the Dominican Republic. So he will be reaching out to you guys at times to set up calls and to really kind of help you out with what we're doing. Okay, Wendy is an awesome investment consultant. I love Wendy's story. She was actually a potential client turned team member. Okay, so Wendy is an investment consultant with us. Ryan is also a potential client turned team member. Same with Robert. Okay, and Keith actually is another client turned team member. And we'll have Jeff's picture up here as well. But he's another client turned team member. So it's pretty cool, guys. And I don't know what better way to say the level of confidence that that your clients have is when they ask you to actually join your team. So Damon and Keith, guys, were literally paid clients that joined our team. Robert, Ryan, and Wendy were potential clients that did join our team. So very cool. All right, guys, just wanted to show you our pictures there. And folks, if you didn't have my number, please feel free to go ahead and write it down. It's 505-322. Okay, 7515. All right. And just real quick too, guys, once you are signed up, Jason is your dedicated resource for any and all questions. So you can ask questions live in the webinars, or you can always email Jason at support@portfoliobuilder.io. Okay. You also have Jason's father, Victor, as a dedicated support specialist to help you with anything you need. Once you're signed up, speak with him directly. No automated phone systems. Like every other finance company you deal with today, you'll call Victor's cell phone directly. Okay. And we take pride in that, guys. So if you're interested in joining, type in your name, number, and into the chat box, and I'll give you a call after today's webinar. Okay. And just going to leave up the disclaimer here, folks, and see if we have any questions before we go ahead and close out here for the day. Okay, guys. So I think we are good. Feel free to call me or text me directly. And I missed about 9 calls during the webinars, guys. So I will, if you did call me, I will call you back in the order I did receive your call. Okay. But always, guys, you can always send me a text here as well. Okay. At 505-322-7515. Awesome, Manhar. Hey, I'd love to hear that, bud. Okay, cool. And Manhar said I'd love to join your team too. Very cool, Manhar. Awesome, bud. Well, yeah, we'll chat. Okay.
Yeah.
Awesome, Manhar. Okay, cool. Appreciate that, bud.
Thanks.
Okay. Thank you, team. Any last questions before we close out, team? Going once, going twice. Okay, guys, we're set for the day. Thank you so much for your time. All of you that have signed up during the webinar, thank you so much. Victor will be in contact with you here shortly. We absolutely look forward to the honor of helping you and your family grow your capital in the safest manner possible. And folks, if you do have any questions before you get signed up, just feel free to call me or text me. I will call you back in the order. I did receive your missed call or your text. Okay. But I am back about 9 calls, but I will call you today. Okay. So just know I will call you today. And thank you once again for your time to join us here today, folks. Always fun helping people understand what risk parity is, helping them grow their capital and their brain. All right, folks. Here's the health, wealth, and happiness. Have a wonderful day, folks. And we will see you in the customer webinars if you did get signed up. Have a great day.